Very good morning, colleagues. Very good morning. Colleagues on the virtual platform, very good morning as well. First of all, let me say all protocol observed. Let's start our day 2 of the forum. I'm standing in on behalf of Maxine because she's stuck in a traffic. It seems there's a car accident on the way coming here, so there is a huge traffic. And we have to go and proceed with our conference and forum today on day 2. So just to provide you an overview of our program today, we'll start with the role of donors in financial inclusion. And that session will be followed by a presentation in terms of innovations in the SADC Regional Payment System. You might have seen and you may recall the presentation made by our colleague Mavis from the CCPG Payment System Subcommittee, where she explained about our regional programs or regional initiatives in terms of payment system. So today, we are going to have a chance to delve into details in one of the initiatives that we have at regional level in terms of innovation in the regional payment system. After that, we are going to have a conversation on community digitization in SADC. And we will take the case of South Africa. That presentation, it's a panel discussion that will be moderated by a colleague from Finmark Trust. And we are going to have a wonderful panelist as usual, like yesterday. I will stop here for now with the expectation that Maxine will come in very soon. But at this point in time, maybe let me ask if there are any burning issues or follow-up questions that you may wish to pose as we reflected on yesterday's discussion. Is there any questions, comments that you want to pose at this stage? And let me say this, we can allow for 2 or 3 questions before we get started with the session on the role of donors on financial inclusion. And I wish also to invite colleagues on the virtual platform. Please, Michael, please help me if there are questions on the virtual platform as well. I can see one hand here, followed by my sister here. We've got 2 interventions. Yes, you can start.
Good morning to you all. My name is Wilson Mollen, and I'm the country coordinator for Finmark Trust in Malawi. My question goes to the panelist, from Cash. I hope he is around. He's around. Okay. So it's about mobile money agents in Zimbabwe. Back in 2020, I think mobile money agents were phased out. I wanted to find out what was the experience like, and in terms of the impact on the ecosystem, and if it created any opportunities and the kind of challenges that also were encountered. And then recently, I think so in international media around May or so, there was mentioned that mobile agents would be reinstated. I don't know how that is taking off and how the agents are responding to that. Thank you.
Thank you so much for that. let's move to the second intervention, and I hope colleagues from EcoCash Zimbabwe have taken note of the question, and you'll be provided an opportunity to respond. Yes.
Good morning, everyone. My name is Precious Hassan from the Securities and Exchange Commission of Zimbabwe. Mine is not a question, but a request, rather. Farai made a presentation yesterday, and at some point we were promised that we would watch the video of the Braille reading. So I'm just requesting if it's possible for us to just make time so that everybody gets an opportunity to see the work that is being done by Zimbabwe in trying to cater for the marginalized groups. Thank you.
Okay. That is well noted, and Farah is my good friend, and I'm taking advantage of being the MC. We'll play that. We'll find time to play the video. Don't worry. Thank you so much. So, EcoCash Zimbabwe, maybe if you can provide some feedback on that. And welcome, Maxine. I will give you the invoice. Yes.
All right, thank you. Morning, ladies and gentlemen. So I will start with the reason why the agents were suspended. My regulator is in here, so I'll state it as it is. So the reason for closure of agents was cited as indiscipline in the market, where agents were perpetrators of black market activity. Yes, we were monitoring, but there are certain transactions which you can't distinguish whether they are bona fide or they are nefarious. So the impact of the closure of the agents was it then confined our activities to the banking system in terms of funding the wallet. So instead of using cash in, cash out to fund the wallet, we were now mainly funding the wallet via banking services. Yes, it reduced our distribution footprint, but internally what it did is it reduced the cost of operation, because our cost of sales, which is the commission that overnight, it reduced to zero. To the customers, yes, they struggled to fund their wallets, and overall, it reduced activity on our platform. To give you a perspective, we sort of reduced our system capacity by 50%. To the economy, it then drastically reduced the value of digital transactions, because people then went back to using cash. And to the government, they lost on revenue, because some retailers, some players in the market were no longer declaring those cash sales. So it was a loss-loss situation to us as a player and the government alike. In terms of learnings, we learned that the service is ours to manage and the risks are ours to manage. So whatever activity that is done on our system, we have to make sure that we monitor, we report STRs, and we manage the risks thereof. The reinstatement of agents was done some 1.5 to 2 years back. And what we have done is we have been tighter in terms of the approval of agent applications. So where we used to even allow sole traders to become agents, now our operations are confined to major corporates, your supermarkets, your service stations, your pharmacies, formal traders. And this is where we are managing the risk. And our AML, we then implemented an AML safety system. And this is helping us to then monitor activity on the system. Okay, thank you.
Thank you so much for that. I don't know if Reserve Bank of Zimbabwe, if you have anything to add on that, maybe in 1 minute, if you can provide some further explanation from the perspective of RBZ.
Yeah, not exactly anything to add. I think he has said it all. Mainly the reason for the suspension was just that of indiscipline in the market. That was our concern as the central bank. So that's why in the first instance, those agents were suspended. But as he rightly said, now they've been reinstated back. So that was the major reason. So everything else that he said is 100% correct. So that was our perspective from the central bank point of view. Thank you.
Thank you so much. Thank you so much. At this point in time, maybe let me invite our substantive MC for today. Now I understand why she is late, because of the dress, probably, right? Welcome, Maxine, and if you don't mind, you can come here and drive our day two of the forum. Let's welcome her with a big round of applause.
Good morning, ladies and gentlemen. You slept well last night? I hope you also had time to reflect on yesterday. So through the course of the day, you'll be asking us questions. My apologies for being late. There's something called the R21. I don't know what is going on there today. So, without further ado, I would like to invite our first speaker for the day, and this is Nomncebo Hadebe from the Alliance for Financial Inclusion, and she's going to come and talk to us about the role of donors in financial inclusion.
May I observe all protocol and greet you all. Good morning, colleagues. I think I've been introduced. My name is Nomncebo Hadebe, and I am from the Alliance for Financial Inclusion as the head of the Africa Regional Office, based out of Abidjan in Côte d'Ivoire. So I was given a task to give a background on the role of financial inclusion, of donors in terms of financial inclusion. I think I need to clear the air first and foremost. AFI is not a donor organization, because a number of my members are actually sitting around this table. I have 20 institutions currently in the portfolio from 15 SADC countries as part of our outlook. So we derive our funding from membership fees, and obviously we get donor fees. So there's a map that I've put up here, and I've colored in a country, specifically just one of my countries, with the AFI logo, because they are not part of AFI, interestingly enough. So 15 out of 16 are missing from the AFI portfolio, and they know themselves, and we could have a conversation, but it's not about that today. Nonetheless, we are represented. We have 20 member institutions from the 15 countries in SADC that sit part of the AFI portfolio. The Africa Regional Office actually has 42 member institutions from 38 countries. So looking at the portfolio of AFI, we have 90 member institutions and 42 are sitting in sub-Saharan Africa. So it means Africa is actually driving the financial inclusion agenda, and it is an anchor for financial inclusion. And the next topics in financial inclusion are probably going to come from the African continent. Nonetheless, as I have said, AFI is not a donor. and please can I put it out, as much as the role of donors is important for us, but I must say we're a member-led organization or network, and ours is to empower policymakers like yourself to increase access and usage of quality financial services for the underserved through formulation, implementation, and global policy advocacy of sustainable and inclusive policies. We do this through collaboration. As you remember yesterday's opening keynote address by Governor of the Central Bank of Lesotho, collaboration is key to foster financial inclusion. We're 15 years old this year, and in the 15 years that we've been in existence, we've been able to make 1,130 policy changes, regulatory and policy changes around the globe. And what does it mean? 850 million people have been financially included, 90 members, 84 countries. Again, we work with like-minded donors who want to support financial inclusion as a catalyst for inclusive financial growth. And our donors are specific as well. It's digital finance, and of key is women-led MSMEs in the region. And as such, we have partnered with the African Development Bank on this through the Affirmative Action for Women a project to ensure that we profile and enhance financial inclusion for women in Africa. We also aim with the donors to enhance access to financial services and, importantly, through SME finance. We can never foster financial inclusion without recognizing that there's some groups that have been previously disadvantaged. And in particular, we have forcibly displaced people. This could be internally, externally, regionally, or continental. But what is key is we've even made it a statement under AFI to say, the Kigali statement says we cater for those that we have been left behind, because we look at what the needs. We need to make financial inclusion more about quality. We've all had great results in terms of access. I think, luckily, we're under the auspices of Finmark Trust here, and with the FinScopes, we've seen the data show that access is no longer such a big impediment. But it is key right now to say, what are the quality and usage of the financial services that we advocate for in Africa? But also, we are also, unfortunately, low-emitting countries, but we are subject to climate change initiatives and such. We need to put in inclusive green finance policies in our financial inclusion strategies. Again, who is most hard hit when climate change has an adverse impact on the economy? It's obviously the people that we work for, which is our beneficiaries, and therefore we need to put in policies that will ensure that they are sustainable for future as well. Okay. So with the donor funds that we receive through AFI and from AFI as a network, we have actually got 12 amazing services. I don't know who has actually been to an AFI event in recent years. I see Brenda this side, and have probably been a beneficiary of what we do. So this is how we use the donor funds that we receive. Key to AFI's DNA is the working groups. We have 7 working groups in 7 thematic areas: financial inclusion strategy, data, digital financial services, inclusive green finance, consumer empowerment, and market conduct. What is also key is that we have cross-cutting issues in all these 7 thematic working groups, and that's gender inclusive finance, because it is key to all the working groups. We also produce knowledge products at AFI, and we do peer reviews. If you have a financial inclusion strategy, we can peer review it to give insights. However, we cannot do it for you because you have the insights as well of what your country context is, and you need to tailor make it. We don't have a one-size-fits-all for that. We have regional initiatives and all over the regions that we operate in, and as such, this is how we have the Africa Regional Office, and it's called the African Financial Inclusion Policy Initiative. It emanated from when we had what we call Africa Mobile Policy Initiative, which was linked to what was driving financial inclusion in Africa, in particular Kenya at that point, which was mobile money. I think we heard yesterday when Maxine was highlighting the insights they received last week on mobile money and what it can do. We do a lot of capacity building and development. What is also key with the donor funding we take is what we call an in-country implementation. Most people would think that is a grant of some sort, but it's actually in-country implementation because we go in-country and develop a program and tailored to that. One of the other key products services that we have is one we've just come back from San Salvador, where we have the AFI Global Policy Forum. 15 years later, it's still the most vibrant network gathering of policymakers, and it's how we've advanced financial inclusion globally and in particular in Africa. The key to our DNA is the Maya Declaration, which is a set of commitments that we make as governments and as entities to say, what do we want to do to foster financial inclusion in our various jurisdictions? Another thing that we do, and that is quite important, is collaboration through public-private dialogue platforms. And this is how we've actually been able to leverage on each other to do sustainable and effective financial inclusion policies. We're a global advocacy on financial inclusion, and we are the voice, and as such in our strategy this year, we're looking at making, being part of everybody that is important in the financial inclusion agenda, including your standard-setting bodies. Yesterday, there was a long conversation on the FATF and its recommendation. I'm not sure how many of the members around you realize that recommendations are being reviewed at the moment under the FATF, and under the Mexican presidency, financial inclusion is a key parameter that needs to be looked at. So have a look at the FATF website. We already have a project committee that presented to us in El Salvador. Data is always important to drive financial inclusion. We cannot make policies from an uninformed, and we have so much data, but how do we collate it? So we have an AFI data portal that could give you a pager of everybody, of all our members and what they're doing, their next priorities and current priorities in financial inclusion. And we are developing a 3D partnership with developed countries dialogue, because it's time that they contribute to the growth of the of our financial inclusion players. What we do on an annual basis is to determine if the donor funds that we're utilizing are still meeting the needs of our members. And I must apologize, we have never moved the data to look at SADC. I think this is now something we need to do. But we've looked at it as a cumulative for sub-Saharan Africa over the years. And this is what the perceptions are from our members. It's a unique platform to meet and exchange with peers on financial inclusion. We provide a policy leadership to navigate financial inclusion implications of the global crisis. We're actually a center of technical excellence for financial inclusion policy and regulatory solutions, and why we call ourselves the leading organization in financial inclusion policies. And what is also key in terms of our member needs assessment, the engagement with developed countries to foster technical dialogues that are beneficial, which is how we also then fund our initiatives within AFI. And we are a platform to provide for dialogue and addressing and finding solutions to financial inclusion issues within regulators. And in all of them, if you realize, we have a very high satisfaction rate from our members. It means there is something we're doing right, but we haven't reached the full 10, meaning there's still work, and this is why we're still here as well. But I think I will also just leave this one, the level of engagement with other bodies, because this is key, and this is why we're probably here. We're trying to enhance our collaboration because we're like-minded, and we're moving towards financial inclusion, and the next generation of financial inclusion is actually not about access, it's actually about the usage and the impact of financial inclusion for driving inclusive economic growth in Africa. So I was also asked, what do we see as the policy priority areas for Africa in the next few years? Because it's still the morning, and I shouldn't have put up the slide, maybe let me remove it. In your easiest thought right now, What do you think are the policies, what are the priorities for Africa at this point in time in terms of, don't look at the slide. Just close your eyes a bit. But what do you think are the policies for, what are the priority areas for Africa in terms of financial? Rado, close your eyes and then give me an answer. Okay. It's key. What is driving financial inclusion agenda in Africa at the moment? It's DFS, Digital Financial Services. Most of you are actually sitting on your phones right now. You could be accessing a loan or doing something else with that, or you're checking your credit score or whatever. So that is a priority area for Africa. But what is key again, if you link it to what Governor said yesterday, it's about the structural transformation of the economy. Infrastructure needs to be there at all times for that. Obviously, you've got innovation as part of it. And your next priority for Africa is actually consumer empowerment and market conduct. A lot of issues have come up with yesterday, how the banks are charging exorbitant fees again for cross-border remittances within the CMA region. And this is what do the consumers need and what do we need to do to assist them? What was also interesting, AFI as a whole thought the next priority is IGF. But in Africa, we're actually looking at financial inclusion data as a priority area. And within all of these, we had thematic areas that came out, cross-cutting thematic areas. FDPs, this could be because of regional geopolitical tensions that we notice. And the most prevalent one was gender-inclusive finance. And as such, we've actually gone as far as doing a policy model to advise all our members what is happening to guide you so that we don't make the same mistakes over and over again. And as such, this is not just you can cut and paste, but it tells you what has happened and what can drive gender-inclusive finance. One thing that we tend to forget is we're all aging at this point in time. And the economy's got new players that need to take it up. And our youth are calling on us to say, we want youth financial inclusion policies that will address us being brought into the economy. IGF is obviously there. I've also shared, also on the slide, just two of how we work as well. For forcibly displaced persons and gender-inclusive finance, you can find that under what we call the Kigali Statement, which says how we are going to serve the underserved, using to make sure that they become a priority. But this includes the youth as well. But we've also got what we call an IGF framework as well, which is now the Sharm el-Sheikh. Recently, our regulators are noticing the importance of innovation and responsible financial inclusion. So we've just had the San Salvador consensus passed in September to say, we need to make sure that as we advance innovation, we are making sure that it's still part of financial stability and integrity as well. So I've tried to highlight some of our priority areas in DFS, consumer empowerment, and financial inclusion. Again, regulators are saying they want to do digital financial services to ensure that we do not impede on financial stability and integrity. So the use of regulatory sandboxes is coming in very quickly. Digital financial literacy and consumer protection in DFS is quite important. Our consumers have got a lot of issues that they are complaining about because we sometimes are stringent in how we develop policies. We develop them sitting in our offices, not looking at it from the perspective of the so we need to look at how we handle consumers and create enabling frameworks for that. Financial inclusion data is important because where are the next steps in financial inclusion? And we can only do that understanding what is happening and our health in terms of our financial inclusion indicators. I will stop there. My time ran out, I think, a minute ago. But this is what we do at AFI with the donor fees, funds we get, and also from the membership fees we collect from the various members here. So if you have questions, do find me, and let us have a conversation on the next step in terms of financial inclusion. Africa is our continent. It's no longer the dark continent, and it will grow if we channel our resources and work together to drive financially inclusive, for an inclusive and efficient Africa. Thank you.
That was very informative. I hope we looked at their 12 amazing services, plus their key priority areas going forward. Right. The next speaker I would like to invite on stage, who is going to look at innovations in the SADC Regional Payment System, is Ruling Herbert. Ruling, you even found a jacket. Hey, he hardly ever has jackets on. So he found a jacket, it's impressive. Please come through, thanks. How are you?
Where is it? Okay. Good morning, everybody. And rightfully so, I don't wear jackets often. We do often find ourselves in the trenches. And as I will be sharing today, and delighted to have been invited, and even more surprised to be highlighted to say, come and talk about the innovations in the region. Because we naturally don't see this as the innovation, as we see this as the building blocks to what we're all talking about. So just from an introduction perspective, my name is Ruling Herbst. I represent an organization called Bank South Africa, a traditional switch or automated clearinghouse for the South African environment, but also the licensed regional clearing and settlement operator, and hence why we are so actively involved in the dealings in the region. And specifically, what I would like to talk to you about today is about TCIB. Hopefully we've all heard about that. Transactions cleared on an immediate basis. And it's only a privilege for me to share a little bit, not just about TCIB and the role it can play in advancing financial inclusion in the region, but also being live in the market for 18 months. And to share some of our observations and learnings, because I do tend to find that once we start talking about topics like financial inclusion, it's an emotive topic for discussion. And it's a complex topic for discussion. But I think what we have to do is when we start engaging around facilitating financial inclusion, we need to start becoming real. Hence, specifically being an emotive topic for discussion. And what we've learned, and I'll share some of our learnings today, and might not be popular everywhere, but nevertheless, it's been an unbelievable enriching journey being involved in the design, the build, the implementation of this wonderful project that SADC has undertaken. But I do stand here today talking to the SADC community, asking why are these innovations or building blocks not fully embraced within the broader community? And that's the question I would like to start off with today as we unpack how we see the world unfolding from this perspective. Like any good presentation, we need to start with a little bit of statistics, and there's lots of statistics that's being shared. I'm not a fond believer in the statistics at the moment, and I'll share with you why. But nevertheless, there's always some lessons to be learned in realities that we can see in some of the statistics. So we're seeing figures around 190 million individuals being deemed to be, which is 77% of the adult population of SADC, being earmarked as being financially included. A massive increase from as far back as 2011, where we saw the figure standing at 57%. So something is moving, something is working. Ongoing concerns about cost have somewhat been alleviated. I think cost has become a key measure worldwide in terms of provisioning of services to it. There's targets being set at G20 level, percentages on percentages, all of that. So it seems like if we use that measurement base, there's a fair indication that there's some positive movement that we can see around that. But I then have to also ask, in reality, is that how it plays out in the market at the moment? If we have to go and ask the consumer, the real user, and the businesses at large, is whether they're experiencing this, I think we might get a mixed bag of feedback from the market itself. We've seen reductions, just to close out on the cost argument, of year on year, and between 2019 and 2021, we also saw about 2.2% reduction in the cost. And then I see a lot of arguments about how this is being calculated. We are seeing a reduction in the remittance outflows, and specifically the SA outward to SADC flows. When we're looking at figures there, 22% reduction. So what does that mean? We're talking about people are getting more and more included. And on the other side, we're seeing real activity reducing. We also know, and why I highlighted that statistic, is that that is the prominent flows, remittance flows that exist within SADC. It's SA outward to the rest of SADC. And predominantly, we see these reductions in a prominent corridors. So what is driving it, and I think, do we understand that? Mobile money, despite high levels of penetration, is lagging compared to other regions. So we haven't seen the success and the active drive and uptake like we saw in other regions. So it's a question that needs to be asked. The other factor that we need to consider is that from an e-commerce perspective, we've seen very little movement and growth. And that being such an important growth element, given the African Continental Free Trade Agreement that set the targets for up to 30% growth, I think it's up to 2030, that playing such an important role in stimulating trade and enabling trade, micro trade. So the question then begs to be answered, so how included are we? So I think what I'm trying to get across is that what I'm saying is, what are we not seeing and what are we missing? We're sitting with an informal market that's substantial, and I think it's driving a lot of invisibility of what's actually happening out there. And to my notion is that I think we need to get real about what's really playing itself out. I had the privilege of being in lots of discussions across 16 jurisdictions over the last 2 years. And it's interesting to see how this unfolds and how these discussions are, in my view, not making sense at the moment. But let's leave it at that. So I'll close off this section by just saying, I can leave a question here, is what are we missing and what are we not seeing? And I think we need to get to those answers to understand, if we want to actively drive inclusion and real inclusion, what will help us to actually get there? So why is it not growing? And I explicitly didn't wanted to delve too much into this section, because I think there's so much studies, there's so much investigations, assessments that's being done about at broad scale what is preventing us from actually digitalizing what we traditionally know as a cash economy. And first of all, naturally, the infrastructure gaps. We've seen considerable movements, especially at national levels, in terms of a lot of activity. And I think it's really heartwarming to see how much effort is going in mobilizing the national payments infrastructures and the ecologies at large with a national level. But I think we'll all acknowledge that it still plays a part, and we do see it playing out at regional level. There's a large dependence between national and regional services at large. From an affordability perspective, I said earlier, so much focus being placed on cost as a measure of what? At the end of the day, we're dealing here with real businesses, real people, and we should be talking about affordability. So, yet again, are the services that's being provisioned affordable? Is that not one of the key drivers for seeing a lack of uptake within this environment? And there's a lot of factors playing into this. The general fragmentation of the market, driven through the active response from a supply side. There's more and more entrants that's coming into the markets, but generally it results in fragmentation of that market, and fragmentation at large does break down the economies. And furthermore, fragmentation leads to limited access or fragmented access, which is probably even more prominent in this. Closed-loop bilateral arrangements are expensive to maintain. Everybody that are currently in the provisioning game, financial services provisioning game, understands there's commercial on commercial arrangements, partnering happening in order to provide these services. It all helps or contributes to cost being increased. The reality is SADC still houses some of the most expensive corridors in the world. And I think that's a message that, yes, there's been improvement, but if you look at it at face value, and there's certain corridors, if you isolate them out, where we've seen lots of successes, but there's contributing factors to that, but then you find those corridors which is just absolutely unacceptably high at the moment. So across the region, there is still something at play that we need to address. Fit-for-purpose solutions, being limited to what's on offer. And I see it quite often, and we've done quite a few studies to have a look at, from a consumer perspective, just sitting back and asking, what do you need? What are you looking for? What will help you? And interestingly enough, we got into the norm of being limited to what's available to us. If you think about the broader cross-border space for many, many years, banking-orientated, swift rails, that's been available. So much of what we do today is limited to what is available and the format that it is available. So it really gives us an opportunity to start rethinking how we look at provisioning, the supply chain of services. What are we supplying, and on what merits and on what basis are we supplying these services, and for what reason are we supplying these services? Regulatory hurdles, lots being said. We've heard about so much work that's being done, but ultimately there's quite a few barriers that still needs to be addressed, that's playing itself out at national level as well as at region. We've got maturing regulatory frameworks. There was comments yesterday made about licensing, all of this. So what degree is it stifling the ability for new entrants coming into the market? To what extent is that stifling competition? So all good questions that needs to be asked that contributes to that. Varying degrees of maturity and readiness, I mean, that is absolutely observed. And yeah, it's linked to the maturity curve of how we're developing within the respective jurisdictions. But nevertheless, that varying degrees of maturity will always plays itself out within this context. Ultimately, it remains difficult for the consumers and businesses at large to make use of available solutions. And there's hurdles that we need to do. And there's quite a bit of friction. And yesterday there were some questions about, even in the CMA, and what's playing itself out. How's that affecting these solutions being made available at affordable rates to people who really need these services? Naturally, lack of trust. We spoke so much yesterday about consumer awareness and education that needs to be done. It definitely plays a role. There's perceptions out there about the digital world that needs to be broken if we want it to be successful. So the last point is not on slide, because I added it last night after I sat back and worked through all the documentation, that I want to pitch up is to say, I think we're over-solutioning the problem here. And for good reason. I think we're starting off talking about the emotive topic. I think there's so much happening. There's so many stakeholders involved in this. I think one of my observations was, aren't we trying to oversolve for what we're dealing with here? Are we creating more complexities in how we're solving these problems? And how well are these things coordinated? So always, I can't explain to you how many notes I took yesterday of such brilliant things that's happening that I'm not aware of. But I think that's a regional imperative that we need to work hard at. Excellent to see how we're pulling things into single plans, implementation plans, and how we're all working together. But there's so many different activities and different initiatives undertaken. How do we bring all of this together for a single purpose? How do we better coordinate all of these for better results? I think, let's ask that question, because I think it's playing a vital role in it. And it also stimulates oversupply of services, further aggravates fragmentation in the markets. So we seriously need to think about how do we better coordinate for better results. So now a little bit of time just to talk about TCIB. I'll explicitly not dwell too much on it, because I think most of the region have been exposed to the service itself. A lot of the countries that we spend good time in has been exposed, has already started subscribing to the service. But ultimately, TCIB is a regional multilateral scheme. And to start off with, yes, we're great at putting names to stuff. Multilateral, bilateral, open loop, closed loop, multi-currency. There's all these naming conventions that's confusing to the broader market, but nevertheless, it serves a purpose. And we need to understand what it was done. This was a very exciting project. When Maxine, sitting there, can show the scores for it, starting around about in 2015, where through the CCBG, one of the strategic initiatives that was launched, asked for the design and establishment of an instant payment system to facilitate cross-border flows in the region. The answer that came out of many, many years of hard work, deliberation, and cooperative work in the region was TCIB. And TCIB, at its ground level, was designed with a very specific purpose in mind. And that was ultimately to drive and support and enable the financial inclusion drive. So what was the result? So now we're talking designs. So what did it result in? First of all, and it's important, it's multilateral. Multilateral in the cross-border world, I quickly learned, doesn't exist. The notion of multilateral cross-border doesn't exist because it's cross-jurisdictional. So yes, we might see in our national infrastructures that interoperability and multilateral arrangements does exist. But as soon as you go into the cross-border world, and it's all predicated on history here, because of how these things were facilitated and set up and designed in the past. The case in point is always going to be SWIFT, which served the purpose, by the way. But nevertheless, when we start talking about inclusion, we all agree, or trade, intracontinental or intra-regional trade, that doesn't serve the purpose. So we spoke about a fully inclusive. How do we bring the community of financial service providers at large together to all equally partake in this initiative? So by being fully inclusive, it means that all financial service providers authorized by the domestic regulators are welcome, can utilize this platform to interoperate and to provide these services to the broader market. It's interoperable. That's what multilateral ultimately refers to. We all come together, we sign one agreement, and we abide by one set of rules, but for the greater good. In providing these services, it doesn't stifle competitiveness. The market is still open. I mean, we can openly compete. But when it comes down to the actual flow of funds, we still need to be stable, secure, and we all need to have a certain conduct against which we can abide. Open loop, closed loop enabled. We provided for flexibility where the use under a single rule book is available under different configurations. Broad scale open or different configurations of open, because the market has to mature and evolve. And we've provided for that level of flexibility. We do promote full interoperability open loop, but we had to provide for the different nuances that's playing itself out. In practical terms, the banks doesn't like to sit next to the MNOs and having discussions. They will contract each other, but then it's lawyers. But when it comes to around, let's talk and let's work together, they don't like that notion. I mean, and that is just what it is. But the fact remains is, the platform is being created for it. Quite important, and I think that we must never forget, it was established and structured in such a way that it presents itself as a regulatory-owned scheme. It's officially owned by the CCPG. Oversight is provided by the PSOC, Payment System Oversight Committee. Why? Because it's a cross-jurisdictional scheme, and that's where the member states have already come together to say, but let's make this work. So there's already an active level of collaboration that is taking place. So it's not a commercial drive, it's an enabler. It's setting up that infrastructure for use and for provisioning in the respective markets, and with the notion of enabling as well as promoting inclusion from that perspective, and trade. Offers a centralized infrastructure to enable the instant flow of funds between two participating participants anywhere across SADC. So it gives access to widespread markets. We're sitting with 16 markets. Just in SADC itself, if you take the 16 markets, it represents anything between 220, 240 different flows of money between countries. So that's the business opportunity. By getting all of this together and making sure that it terminates over single infrastructure, starts making sense from an economic perspective. The challenge is, how do we mobilize the network? It ticks all the boxes. ISO 222 compliant, regulatory compliant. Yesterday, the discussions around FATF and all these regimes was raised again. This was already designed with the broader regions to make sure that we can set up a central service with one rule book that applies to all jurisdictions and participants within those jurisdictions. Multi-product or service enabled, so it doesn't need to only serve one purpose, it serves multiple purpose depending on the demand over a single rail. It's important because we're talking about the establishment of infrastructure, this notion that everybody has to go and establish infrastructure and has to establish all these relationships and have to establish all these different parts in order to get into the business. That is what was actively being targeted through this type of design. Already touched on the fact that the ownership is entrenched in the regulators. It's unbelievable to have this relationship where you have public-private collaboration in terms of taking these type of services to the market, which is quite important. One question I actually often get asked is, do you see the regulator as a friend or a foe? That's not a question. It should not be a question. You should be a tight collaboration. That's the only way in which we will deal with and solve for these tough questions that's lying ahead of us, these emotive topics that we're discussing. So, interestingly enough, and I had to update this slide this morning because things are moving. But just to share a little bit with you, where are we at with TCIB? Like I said, we've launched to the market about, it's now just over 18 months, about 20, 21 months. And where are we at? Over 50 members have already subscribed to the service across 11 SADC countries. 35 of these members has already become participants and are working their way through the onboarding processes and getting themselves ready to actively use the service. 8 participants are already certified on a platform across 6 countries. 6 participants are authorized by the regulators to actively use the certification to provide services out to the market. In other words, they are actively transacting or providing these services to their clients and transacting through this platform. As we stood yesterday, and it's something that we're now ramping up starting this month, processing around 1,000 transactions with the estimation for that to pick up to around about 15,000 transactions a day by the end of this month. So it's there now, it's working. So the skeptics can come and have a look and see that we are literally moving money across borders through the centralized platform. Everybody abiding by similar rules and actively providing these services at low cost to their customers. We also are quite proud of already having 2 ACHs, the one in Zambia and the one in Zimbabwe, that's formally partnered with us to integrate into the service. And we do believe that that's an unbelievably important drive, and I'll share a little bit around it later on. But we've already got our first 2 ACHs integrated into the system, and it's going to become a very important vehicle for us unifying national and regional objectives and try and capitalize on each other's progress. At the crux of it, I think we've seen great progress. Over 21, 22 months, having so many people joining I always call it a movement. It just sounds better than say, listen, a payment system. It's a movement because we're actually actively driving change. 18 months, seeing those type of achievements is not too bad if I have to compare it to any launch of any new payment system nationally or regionally that we've seen. But ultimately, it's still slow. Now we're getting to the point where we're ramping up transactions. It's been 20 months. It could have been faster. We could have done it better. But it did give us the opportunity to really delve deep and actually have a look at what's playing itself out there in the markets. What are those things that we need to consider? And I think these are the things that we really need to sit back and say, but how do we solve for these? Because I think, and this is just a metaphor that I've created, talking about this cash wall. Because ultimately we need to acknowledge, what are we busy doing? We're trying to digitalize. In this instance, cross-border. That's ultimately what we're trying to facilitate. And despite good efforts from regulators, governments, as well as from the private sector, the providers, cash remains resilient and still preferred by many. On the right-hand side of the wall, I think everybody is trying to say is let's displace cash because there's something good behind that. On the other side of the wall, when we do our corridor analysis, like I said, when we start sitting and dealing with the individuals, the businesses, the SMMEs, and we talk to them, we actually find a different reality. They're actually preferred. They're actually very comfortable. Are actually being confronted by saying is, but why do you want to change anything? Leave it, it works. It's convenient. Yeah, but it's expensive. No, it's fine. So we are confronted there with characteristics of cash that's so entrenched in our social structures. Yeah? It's the norm. It works. It's convenient. It works. Now, through this analysis, I've seen the best, most efficient payment systems that's being launched. It's amazing to see it working. It is so creative. Here we're sitting and we're paying millions to build payment systems and to get things right. On the other side, a cell phone, WhatsApp, a few buses, and you get the most efficient instant payments rail that you can ever ask for. Settlement is nothing wrong. Immediate clearing, deferred settlement through bus. It's genius, but it works. It's convenient. And people are making it work because it's resilient. It is there. It's the reality we're facing with. And it stays efficient, it's effective. Economically, I don't have to fill out any forms. I don't need the technology. So yeah, so these are the things that's just real. So, and we need to acknowledge that. This is the crux, and then I'm closing out. Yeah. So in that, there's macro forces at play that we also need to acknowledge. First of all, and this is at domestic level, and we can't isolate the cross-border discussion from the domestic discussions. And there's macro factors that's playing itself out that we need to acknowledge and we need to actively start thinking about and how do we solve it. We do believe, and I won't go through the benefits, I think there's so much that's been written up. There's so much has been said about broad-based interoperability, whether at national level or whether at regional level. We do believe that broad-based interoperability is the vehicle towards facilitating broad-based inclusion. And although it's a challenging thought, like I said, the world works differently. It's predicated on very different notions. We need to actively and realistically find a way of embracing the notion of interoperability and how that can actually drive and aid us. How do we get to those outside corners of the region? How do we provide free access to these services in every possible corner of the region? These type of questions is what we can and will be able to facilitate through these type of things. The benefits talks for itself. To embrace the value of interoperability, we need to question some of the existing norms. From central banks, how to best test and validate and evolve regulatory frameworks and build consumer trust. In context of us having to establish interoperability. From a private sector, challenging thought, we have to challenge our business models, and we have to acknowledge that we're actually trying to build a larger market here. We're trying to increase the size of the market. The total market must be bigger than what we're seeing at the moment. So instead of aggressively competing for the existing market, how do we actively grow the market, and how do we share in that absolute growth that's in there? How do we contribute? On one side, we can do our businesses, but on the other side, how do we actively contribute to the inclusion drive and the interoperability drive that we need to have a look at? There's different ways. For example, making your networks available into the interoperable network. You don't have to process your business through the network, but you can give people access to those. So the big question that I want to end off with is the bringing in the element of, yes, we acknowledge that these type of interoperable platforms does have a role to play and can be utilized to promote overall financial inclusion. We do believe that to be able to do it at scale, we need to facilitate the seamless integration between the national and the regional infrastructures. We need to capitalize, and I've intentionally said it when we started, there's so much happening at the moment, at national level, at regional level. How do we embrace all of that and work towards single outcomes? And the benefits in itself is for cross-border to start presenting it as a seamless extension of what you're doing nationally. Because if you look at the cross-border, that's the diagram I'm showing there, there's a mid-mile connection that's being established here at multilateral level, but your first and your last mile activity, where real digitalization needs to be embraced and driven, sits within the respective jurisdictions. And we need to find a way in how we can structure and work together at that level. It will take a relook in terms of how we structurally engage at national level to make this a reality. And that's something that we actively need to pursue. And that is not just regulatory engagement, it's also across the spectrum of domains, the private sector as well as government. How do we actively work together to promote and drive the adoption and use of these services as an extension of your national services that's already available? A lot's being said about this. The whole world is going mad at the moment about bilateral linkages between countries, linking instant payment systems. It's not just about linking instant payment systems. It's about connecting economies. It's a much larger thing. And the fact that everybody is still evolving in maturity should also not be a problem in today's technological world. Those can be solved for. Last, we've got to keep on empowering the communities through ongoing digital literacy to ensure that people are becoming aware of the benefits of what is being provisioned and that it's been tailored for them to use. In closing, we believe that the implementation of the SADC payment system will bring about change. And sitting here hearing what's happening, change will come about. The TCIB scheme and platform is live, it's ready, and can be used as a vehicle to facilitate interoperability, which we believe is the catalyst for driving broad-scale inclusion. We need to be realistic about the gaps and barriers. We can talk days on end about all these gaps and barriers, but that shouldn't become the focal point. What we need to achieve has to be the focal point, and we need to find clever ways of embracing it. And utilizing what's already been implemented and invested in. We need to coordinate efforts better, driving a single goal. And I'll reiterate that across, every time someone's going to ask me today, I'll reiterate it again, in order for us to find better results. We have to coordinate our efforts better, because there's so much good happening. But if we can all put them in one pot, we will see very quick success. And these goals that everybody is chasing at the moment will become a reality for us to achieve. Thank you.
Thank you. We can tell Ruling is very passionate about the work that he's doing. I was very happy when we had to hand over the initial part of work back to the CCBG and its appointed operators. Right. Could I call on Lesego Mashego? Lesego is going to be leading a panel which is going to look at the conversation on community digitization in SADC, a South African case study. Thanks, Lesego.
I'm not presenting, so I'm just going to call the other panel members, and we're going to sit down. Are those microphones on? Okay. Hello, everyone. I actually wanted to go straight to the chair and sit down. My name is Lesego Mashego. So today I'm not going to do a lot of talking, and I think Ruling did a good job, right? Sipati and Grenade. He introduced what we were going to talk about swiftly, and it makes it easier for us. And I guess it makes it easier for us to also stick to the time that we have, which is 30 minutes. So when I walked in, someone said to me, we're going to ask you questions, and I said, you can't, because I only have 30 minutes, and I like talking, and I want to give my panelists an opportunity to talk as well. So without further ado, I'm going to call upon Sipati Nekondela from National Treasury, as well as Grenade Yudamu from Malawi, Reserve Bank of Malawi. Thank you. In the middle, gentlemen, you're the only one, and you're surrounded by females. You should feel privileged that you have such gorgeous females surrounding you, Grenade. Welcome. I think maybe before we start, it's important that people know what you guys do in your respective institutions. I just mentioned the institution, but I'm sure they want to know what you do. Let me start with the gentleman, Sipati. Grenade, what do you do at the Reserve Bank of Malawi?
Okay, good morning. So my name is Grenade Yota, coming from the National Payment System Department, especially from the oversight section of the Reserve Bank of Malawi. So we pretty do much of the licensing, the monitoring, all those on-site and off-site, and also production of various reports on the trends in digital payments and other trends. So that's what I do on a daily basis. Thank you.
Sipati, to you.
Merci beaucoup. De parler français. Yeah, that's all I got yesterday. So, yeah. Good morning, everyone. My name is Sipatina Kondela, and as has already been mentioned, I'm with the National Treasury. I'm a director of banking development in the financial sector policy unit, where we are largely involved with the regulatory and legislative developments of the financial sector. In my day-to-day job, I deal with issues related to payments, financial education, and some form of consumer protection, and also just liaising with my colleagues who are working in the financial inclusion space. Thank you.
Thanks, Ipati and Granat. As they introduced themselves, I'm sure you were able to see where we're going, right? So it talks about, our panel session is meant to talk about the role of technology to improve access, efficiency, cost effectiveness, security, particularly in the financial services. That's too broad. I'm not gonna be able to do it within 30 minutes, so we're going to focus a lot more on payments and the use of accounts. And that's the reason why I said they must introduce themselves, because then Granat mentioned digital financial services, Sipati mentioned banking development. In South Africa, banks only have accounts. They may have remittances there and there, but I think the focus here would be from a payments perspective. So as I was preparing for this session, I think a key thing that I noted was that from an account ownership perspective, globally, we're doing very well. Even in the region, I think ruling highlighted those numbers. At a global level, financial inclusion or account ownership specifically is at 76%, a 25% increase from 2011. And the global population, from a global population, and then 71% of the people in the developing countries have access to accounts. But a recent World Economic Forum paper states that prosperity of this is not directly derived just from standalone account ownership, but rather from the appropriate and consistent use of those accounts. And I think it's something that Nomngebo highlighted when she mentioned usage and impact are key. And I just wanted to get a sense from you, Sipati, what is the situation like in South Africa? Where are we from an access perspective, but also from a usage perspective? And then I'll also ask Granat to respond to the same question.
So, Lesego, from a South African perspective, we have over 90% of South African adults having some form of a formal financial product or service. And of those, over 80% of them have access to a bank account. However, a more nuanced analysis of this shows that our consumers are not really adequately engaging with the financial services sector. So just from a financial inclusion perspective, from a credit perspective, over 60% of South African adults have some access of credit, formal credit. However, we are seeing a very high level of over-indebtedness in South Africa. And even in terms of some of the other financial services products, such as your funeral insurance, we're seeing much more of the funeral insurance cover as opposed to other asset insurance. So that also just shows a bit of a disconnect in terms of what is happening in terms of the usage of, of those financial services. And also from a perspective of the MSMEs, we're seeing that they are also just marginally served. And I think in South Africa, a large driver of bank account access was the transition to having the digital payment, the social grants paid via the bank account. And this quite, improved the, our numbers in terms of access to a bank account. However, there we're also seeing the mailbox phenomenon where money is transferred into an account and immediately withdrawn and used in cash form. And this is now, we're not really seeing the use of the digital payments, most of the to what previous presentation was talking to the, the ubiquitous form of use of cash in their communities. And also that is also related to the fact that the merchants in those localities are also not providing for digital payments for, whatever reasons that maybe we'll get into at a later stage. Thank you.
Grenard?
Yeah, thank you very much. So I think we have made significant progress in Malawi in terms of growing the access of financial services. For example, the recent FinScope survey, which was released, I think, a month ago, but for 2023, shows that access has reached 8%, out of which formal is around 74%, and the exclusion is now at 12%, which is a great movement from the 55% we had in 2008. So the main driver has been mobile money. I think the discussion we had yesterday alluded to the fact that in most SADC member countries, mobile money has been a key driver. But above that, we have a number of enablers that have helped us to reach that level. For example, the development of national strategies for financial inclusion led by the Minister of Finance. I'm glad the director is here as well. So those strategies have helped us to kind of reach at this level. For instance, the first strategy was in 2010 to 2014, whose focus was on increasing access. And in the survey that we did in 2014 found that we had moved to 49% in terms of inclusion. The second strategy then ran from 2016 to 2022, whose focus was now to grow the digital payment services. And from the results of the survey done in 2023, it shows that we've indeed made progress using the digital financial services. So we have just launched another strategy, which will run from 2024 to 2028, whose focus now is on promoting savings, investments, wealth creation in line with our Vision 2063. So my colleague yesterday from Zambia did talk about financial health. Beyond the access, for people to transact, they have to have the necessary resources. So that's our focus now, and we have a number of partners, and I'm glad that some of the partners are also in the house. We have FAMSE, which also are helping us to reach out to the rural masses with different initiatives. We have Finmark Trust, which is also helping us carrying out the surveys and also some of the projects that we are having. But beyond that, we also saw the coming into place of the Payment Systems Act as one of the key policy issues that we had, because it brought kind of like clarity now in terms of the bank's mandate to license and oversee the payment space. And also other initiatives that we did, like the introduction of the national ID, because initially onboarding procedures were being hampered by the lack of proper identification documents. But with the coming in of the national ID system, it has kind of provided a proper identification document that can be used for accessing the various services. The other enabler has been the mass awareness campaigns that we've been doing, led by the central bank as well as the ministry. So beyond that, we also have a specific initiative led by the bank, where our focus now was on digital financial services. So we had a campaign. We used to call that the Go Cashless campaign, which was being done through the National Task Force on Electronic Payments. This was kind of like an industry-led grouping, where we brought together all the different sectors in the economy, the service providers, the telecommunication regulator, the Ministry of Finance, just to come together and see how best do we address the challenges that are preventing people from using the digital financial services. So awareness came top that despite the various products and services being offered by the service providers, it appears people were not aware of those services. And therefore, we embarked on those awareness campaigns, the road shows, community engagements, and others. But in terms of usage now, you still find that despite the efforts that we have made in terms of increasing the access points and the accounts, usage is still very low. As my colleague did say, people do still withdraw and make the transaction using cash. So we are now trying to come up with an initiative on community digitization, where I would want to have a focused effort, because we have some areas like Likoma Island, which is about 70 kilometers away from the mainland. The only movement to that place is through water and a few planes that also does go there. But you would find that the majority of the transactions at the island are cash-based, and therefore would want to have an initiative of reaching out to that area to understand their needs, so that together as an industry we can devise strategies that will ensure that the district, they use more of the digital financial services. So we are talking with Finmark Trust to support us in doing a feasibility study for a start, the results of which I think will inform the next steps that we can do to address the challenges. So I would stop there for now. Thank you.
Thanks, Granat. So in both countries, it looks like on paper, if we were in school, we'd be doing very well from a financial inclusion perspective. One of you would be scoring a B, one an A. And that's fantastic. If my son came to me with that report, I'd be very happy. But it seems as though there's challenges, so there's underlying things that are happening. And with us understanding where we are globally, the fourth industrial revolution, technology, and I think, Renat, you've already started talking about it, that DFS is something that you're introducing, but it seems as though technology has a role to play in advancing financial inclusion in both environments. But I think what we would be interested in understanding is what. So there's technology, it's there. I know I use a lot of tech. I think someone said that we are all on our phones. We could be accessing loans as we are here. But is it the same for low-income households? Is it that easy for them? Do they see technology the same way that we see it here in this room? And do they see technology the same way that you from a Reserve Bank and you from a National Treasury would see technology? Is it something that they open to using? Is it something that they are willing to use? Is it something that we can potentially use to advance financial inclusion in the region? Any of you can take this one.
Yes, I can go first. So I think because of the setup like in Malawi, the majority of our population, about maybe 80%, is rural-based. And then literacy levels are also very low. So you could imagine the proliferation of these digital payment services. The adoption rates are very low because of those literacy challenges that we have talked about. But again, you would see, I think, from the initiatives that we are doing, we have similar initiatives that are being done by our telecommunication regulator, where they are trying to do digital literacy, which we feel will have an impact in terms of the adoption and the usage of the services. But as you have rightly said, technology is helping us to expand the reach of financial services. We talked about mobile money. But the technology has also come up with its own risks. We talk of cybersecurity and fraud. So in our setup, we have had increasing cases of fraud, which in a sense erodes the trust that people have. So coupled with the low literacy levels, we have a challenge ahead in terms of getting the numbers, especially from the rural areas. But the good thing is, as an industry, we saw that, we had that challenge. So led by our telecommunication regulator, we set up a task force because most of the fraud cases that are happening in Malawi, they are done using social engineering. If we trace those cases, they are emanating from our country's prisons. So that's beyond now the mandate of the central bank. I'll tell you an example. What they are doing is they will make calls, random calls, and in the process they will persuade the customer to reveal their secret information. So Malawians, as we are, we say we are the home heart of Africa. We are very humble people. So if somebody calls you by name, you open up because you feel the person knows you. So in the process, they get to reveal those secret information, their pins and the like, and they are defrauded. So through that task force, we have brought together even the prison services, the police, like the stakeholders that would have a say in terms of even increasing the security at the prisons, automating the process of scanning whatever is entering into the prisons. And beyond that, our telecommunication regulator is also coming up with some regulations. For example, they are coming up with what we call the SIM registration regulation, which will, among others, reduce the number of SIM cards that one can have. On top of that, they also start registering the gadgets that are used for performing.
The digital payments roadmap and is trying to work with the industry, other stakeholders to ensure that the way the digital payments are provided, they take into account the ecosystem within the communities are existing so that the solutions that are then provided are consumer centric and tend to address the needs of those communities. So talking to issues around the digital literacy, issues around interoperability, and also legislation and that will come at a later stage, but also in trying to ensure that we increase the scope of players in the sector and ensuring that we also, it's not just banks that are serving these communities, but we have a wider range of service providers who can then provide services to these communities. And I know in South Africa, I mentioned that we are a highly banked society with a very high penetration of bank accounts, and as such, initiatives such as, so the product that the M-Pesa product that has been very, very successful in Kenya, and also mobile payments that have been, very successful in other jurisdictions. In South Africa, those type of products did not take off, largely because of the high penetration of bank accounts, but also in terms of the low levels of digital literacy, which, in terms of consumers being aware of, what are the the advantages and, what would be, things that would be beneficial for them to be able for them to be using these mobile payments. I think I've also mentioned the issue of the regulatory restrictions that would require that mobile money accounts be backed on a one-to-one basis to a bank account. We've talked about issues of interoperability where you have these closed loop systems that then, kind of limit what the consumers can do in terms of them being able to, transact with these type of digital payments. Thanks.
Thanks, Sipati. But these things come with, so as Granat mentioned, there's advantages and disadvantages, right, to introducing digital financial services, no matter how good our laws are. So a key one that I know, in addition to what you mentioned, Granat, talking about fraud, which is the security part of these services that we provide. So as Finmark Trust, we're implementing a project in South Africa specifically, and it's a community digitalization project. And we had engagements with enterprises and consumers at a local level. I was actually there yesterday. That's the reason why I was not here. It's not because I disappeared, ladies and gentlemen. And a key thing that keeps coming up is that for them, cost is an issue. It's a big issue. And I mean, I tried to pay using a card. I was charged a different amount. There was a 10% levied there. I was not told until I said, no, never mind, I'll pay you with cash. And he said, oh, no, the price reduces. And I said, and how did you get there? And cost remains an issue, right? And I think it's important as member states, we try and unpack how do we address these cost issues, and what do we do? Is it an education thing that is required from an enterprise perspective? Is it a regulation thing? Because the cost of the POS machines are not also the same. The cost of the transactions are not the same. What needs to be done? Sipati, let's start with you.
So, Lesego, I think a key, issue in terms of the issue of costs, yes, there are those costs. And I think even in terms of transacting digitally, there's a perception that the bank costs are much higher because of the fees that are levied when you're transacting, or when in terms of your bank account, there's a charge for you having a bank account on a monthly basis. You need to pay for having access to that bank account. And these are things that, in terms of financial education, we need to do more around disclosing these fees when you're, for example, when a consumer comes through to the bank to open a bank account. Oftentimes you may find that somebody's just there, okay, fine, you let them know, I'd like to open a bank account, this is what I need it for, and they go on their laptop and click away. The next thing they say, sign here, sign there, without explaining to you how much this thing is going to cost, and how, what are some of the ways in which you can reduce the cost, or what do you need to know for you to be able to have this product working for you in the way that you would like for it to. And I think even from an incentive, this is anecdotal, but what has been found is that in terms of the frontline staff, there are targets to be met. You're then going to be given an account that's, that's of a, higher fees compared to, if you know, okay, fine, I'm only going to be using this for a few transactions in a month. This is the product that would be, relevant for me compared to you giving me the other one that's a bit more expensive. So those are some of the things that we just need to also be mindful for. So, for example, even in terms of the data cost, where I'd be thinking, okay, fine, let me do this on my app or whatever. There are costs that are related to that in terms of data costs. Sometimes the app doesn't work if it's not updated to the, to the latest version. So those are some of the things in terms of the costs, and also in terms of for the merchants, where you've got the fees for, you know, for transactions that are not clear. So these costs then get passed on to the consumer, as you were saying. So as a consumer, then I'm going to want to pay, you know, the amount that is less. I don't want to be paying extra, and that is a hindrance to us using the digital payments.
So we're not going to achieve this without strong customer protection and financial literacy knowledge. And I think in most instances, we focus our financial literacy on the consumer and individual. Myself, we forget that there's an enterprise. So for you to be able to make sure that digital financial services are used, it's a community that you look at, right? And that community has different elements in it, and it has enterprises and it has consumers, and they both need to understand what it is that they're doing or how much it costs them, but also what are the benefits of these things that they do. In your case, Grenad in Malawi, what are some of the things that the government of Malawi is doing to make sure to address these cost issues where they do arise, so that we can learn from Malawi?
Okay. I would agree with that the cost is a big issue, even in Malawi, because, you know, paying using cash for the rural folks is cheaper. That's how they view it. So anything that would take even a single tambala from their funds, they view it as very expensive. But as she has rightly said, each and every delivery of service, there is a cost to that. So apart from the awareness campaigns that we've been doing, highlighting the benefits of migrating to digital, there are also some initiatives that we are also doing to ensure that the issue of cost goes down. For example, there have been discussions on maybe tax waivers, lobbying the government for tax waivers on some of the gadgets that are used to deliver the various digital payment services. So it's a discussion that we're still having through a number of forums that we have, for example, through the National Task Force on Electronic Payments, which kind of brings together different stakeholders, including the Malawi Revenue Authority, which is under the Ministry of Finance. So it's an issue that we're still grappling with. We haven't yet found solutions, but we keep the engagement with both the private sector and the government to ensure we reduce the costs and then we increase the utilization of the various services. On the same, you would find that we have not yet made significant progress in terms of growing the merchant payments. So, because in our regulation, a customer is not supposed to pay any fees for transactions that are done through mobile money or even the POS in shops, the cost goes to the merchant. But initially, when mobile money just came in, and that's the discussion that I continue to have with my sister from Airtel, most of the merchants had registered as agents. So if I go into a shop, I buy and pay using that merchant code. It means even the shop owner was getting something out of those transactions in terms of commission. So when you go to the same shop and say, for example, Airtel goes to the same shop and say, now I want to register you as a merchant. It means they are getting out that agent code, which the agent benefited by getting the commission. They are giving him or her the merchant code, in which now the merchant is supposed to be paying the fees. So that's the challenge that we are having now. I don't know how other countries have addressed that challenge in terms of growing the merchant payments with the issue of fees in mind.
I'm out of time. I was going to ask someone to tell us in the audience how they've addressed that. But I think as we have tea, we can have a conversation with the different role players and ask them how they've achieved that, Grenad. But just to close, I think we all acknowledge that financial inclusion is important. And I think we all acknowledge that from on paper, we're doing well. I think we all acknowledge that digital financial services are probably the way to go in order for us to move us from one point to another. Just some closing remarks from you and Grenad on What are these bold things that we need to be doing to make sure? I think Ruling mentioned something when he was presenting it as he was ending, that innovation, and I'm going to look for that quote, Ruling, because I liked it, right? How do we get communities to embrace the building blocks, the innovation that's brought in? Just to close on that, how do we do that? What do we do with our community?
Okay, so I think one of the issues that we have had to do in Malawi is to have kind of like role models in those communities. So it could be the chief, or it could be somebody they respect. If those people actively use the digital platforms, then the whole community will go along. And the other issue that I wanted to close with is the issue of stakeholder collaboration. We cannot do all these things alone. We need different partners, be it the service providers, the government, and the other regulators, and the development partners. We need to keep working together, even in terms of the mass awareness, development of certain products and services. We talked about the collaboration that we want to have with Finmark Trust in terms of digitalization of the Koma Island and other initiatives. We need partners like those so that we can grow our ecosystem and save our people better. Thank you.
Sipati?
From our side, Lesego, I think we are looking forward to the implementation of the digital payments roadmap work, as well as the payments ecosystem modernization that is striving to ensure that the payments ecosystem is very inclusive, safe and secure, and all these wonderful things. But another project that we are very much looking forward to is the results from the community digitization project, because what is particularly unique about this project is that it's gone into the communities to get to understand what their pain points are, so that we then solve for those, instead of just imposing products onto the community without, understanding what their needs are. Thank you.
Thanks, Sipati. Like you've heard, ladies and gentlemen, needs assessment is important, financial education and literacy, making sure that there's consumer protection, but making sure that you collaborate as stakeholders and don't think that you can do this alone. I'm going to close it there. Thank you very much.
Right. Thank you very much, Lesego and the colleagues. Grenada is not lying. Malawi is very peaceful. So peaceful such that one day I got there and my colleagues were asking me to take the citizens who used to live in South Africa and had gone back there to bring them back with me. And I asked him why. He said, I will not use his exact words, but it was, these guys, they are now bombing the ATMs. We never had that problem before. Now they're importing these skills from South Africa. And I don't have budget. And I now have to put cameras at ATMs. I never had this problem before. Don't you want to take them back? I'm like, no, what am I going to do with them? And I want to ask Garrett, you still walk around with batons. You don't have guns, right? That's how peaceful they are. No, really, that's how peaceful Malawi is. The next meeting, if there's money, we should go to Malawi. Would advocate for Malawi. Colleagues, so this is what we're going to do in the interest of time. You look, either something happened last night and I'm not too sure what, but your faces look blank from where I'm sitting. So, two things. We're going to step out very quickly, grab a cup of coffee, be back in 10 minutes, right? In that 10 minutes, you're also going to think about all the questions you want to ask. And then what I'll do is when Christine finishes her presentation, I'll take a round of questions so that we just get a bit livelier. I'm hoping with a coffee break of 10 minutes, the walk out there, those who need to go and smoke, do that quickly so that you just look a bit more livelier. Something happened last night. I don't know what. I kept you too long yesterday. I thought we had fun yesterday. Okay, so quickly, 10 minutes. If we could please be back. My watch says 11:27. Is that correct? Okay, so 10 minutes, please. Very quickly. Thank you. Yesterday it was the same thing. Right. Who has left the phone? Lost phone? Lost phone again? What are you checking? That you lost a phone? No, you either lost it or you didn't. Ucheka eng? Wa reng ma? O itlhoketse ha kae? Emma, ke yona eo. Why is here the phone go toilet? Why? Why? That thing doesn't work. What I can open your phone without. Thank you. Ladies, and this is now the second lady for today. Ladies, there's something about the phones and the restrooms. Please leave the phones here when you go to the restroom. We're lucky we're finding the phones. Right, back to business. And you look a bit livelier now. You see, I think you needed that leg stretch. I still want to know where you were last night, because we were not invited to that. At least I didn't get that invite. Right, for the next session, we've got Christine Hugard from Senfree, and she's going to present to us on the SADC Regional Market Conduct and Financial Consumer Protection Guidelines. Again, I'm going to ask that we keep the questions so that at a later stage we ask Christine the necessary questions that we would like to ask her. Christine, the floor is yours. Thank you.
Thanks, Maxine. Oh, pointer. Thank you very much. This one from next. This one. That's next. Okay. We just press it once. Okay, perfect. Good morning, everybody. Maxine said you can ask me questions afterwards, but she also wants you to wake up. So maybe I should do a Q&A on the SADC Consumer Protection Guidelines afterwards. I'm here to talk to you about this topic of market conduct or financial consumer protection. As we heard from Nomtebo's presentation earlier and the AFI member survey, that's really one of the very important topics, and it really goes very much hand in hand with the whole topic of financial inclusion. And at the end of 2021, the SADC region set out on this journey to develop financial consumer protection guidelines that would align with international best practice. So that takes into account all the different international frameworks and principles, obviously very important among them, the G20 high-level principles on financial consumer protection. But importantly, that's also aligned to the SADC context. So as part of that, we had consultations with all the member states, did research really to understand the situation of both financial inclusion and financial consumer protection in the SADC context. So these guidelines were then developed and adopted by the SADC Ministers of Finance in July of 2022. As a follow-up to that, the ministers then requested another study to say, okay, so we have the guidelines, but what is the actual level of implementation of those guidelines? Where do we as a region stand vis-a-vis those guidelines? We then developed a dashboard tool where we assessed the progress for each member state and for the region as a whole. So what I would like to share with you today is firstly just an overview of the guidelines themselves, just as a recap. And then also just a snapshot of the findings of how the region is faring against these guidelines. Okay, now I can run you through the list of all the guidelines, but you'll probably just forget them as I rattle them off because it's quite a mouthful. So I thought, let me explain to you the framework or the logic behind the different elements that make up this set of guidelines. And hopefully you'll find it quite intuitive. So I like to think about consumer as having both a supply side, what must the market do, what must they bring to the table, how must they conduct themselves to protect consumers, as well as a demand side. How do you want that conduct to translate for consumers on the ground? Now, if you look at the supply side, really you can argue that the heart of financial consumer protection is about responsible conduct. So an important guideline and principle there is about having all the different elements in place to ensure responsible conduct by licensed financial service providers. But more broadly, you also want to have a financial system that builds confidence and trust of your consumers. So as part of that, you need a few further guidelines or principles. Very importantly, you need prudential protection. You need consumers' assets to be protected, and you need financial service providers to be sound, right? Then you also need privacy and data protection. So that's another important principle of financial consumer protection. And I think you will agree with me, especially so in this era of digital financial services and the proliferation of data. Then you also need cybersecurity, as they were discussing in the panel just now, fraud and social engineering and phishing and all of that is very relevant to ensure you combat that in the name of financial consumer protection. And then finally, and very importantly, you also need a competitive financial sector. So you need a competition framework to be in place, and you also need mechanisms to encourage formalization plus innovation and a level playing field for new and innovative players to also enter the market. So all of those are important supply side elements to financial consumer protection. On the demand side, what you ultimately want to see is empowered consumers. How do you get that? To get there, you need a few linkages between the demand and supply side. In the first instance, you need consumers to have access to the appropriate and sufficient information in a format that's clear and that they can understand so that they can have responsible financial usage and make informed choices. So there's the principle of the guidelines of disclosure. Then you also want to empower your consumers to be able to have the knowledge and skills to engage with their financial services in an active and optimal and responsible way, and to also know their rights and responsibilities. And for that, you need financial education. So that's an important principle on which guidelines are developed. And then finally, when something does go wrong, you want your consumers to also have recourse back to the supply side, back to their financial service providers, and to be able to have accessible dispute resolution and redress mechanisms. Then, to make all of this happen, you need the principle of legal recognition. So that means that you need financial consumer protection to be entrenched in legislation and regulatory frameworks to ensure that consumers' risks are managed. And just having regulation on its own doesn't help. You need effective oversight as well. You need the mandate for financial consumer protection to be entrenched in an oversight body, and for that body to be empowered to supervise financial consumer protection. And hand in hand with that, you also need effective monitoring of what is happening in terms of compliance, but also ultimately in terms of the experience of consumers. So you need effective oversight and monitoring. And all of this plays off against the backdrop of fair consumer outcomes, with the emphasis on outcomes. So ultimately, you want to get not just to a point of compliance and ticking of boxes by your financial service providers, but to fair outcomes from the consumer point of view. So that is both an underlying principle, as well as the ultimate result of the rest of your financial consumer protection framework. And those, in a nutshell, are the financial consumer protection guidelines. So I'm not even going to repeat it for you now. It is a bit of a mouthful, but those are the 11 topics. And for each of those, it basically says what is the principle that should be in place. And then the guidelines set both some basic requirements that should be in place and some more longer-term objectives depending on the context of the country. Just to give you an example, let's say for the very important topic of consumer recourse and redress, as a basic requirement, you want your financial service providers to have internal dispute resolution mechanisms in place. And you also want consumers to be able to escalate that complaint externally if they don't feel that the provider addresses that. So maybe that might be that the regulator, the central bank or the non-bank regulator still handles that complaints. Over the longer term, you want to say, let's establish an alternative dispute resolution mechanism, and let's look at broader measures of tracking the effectiveness of recourse than just looking at complaints lodged. The same for financial education. Maybe the basic requirement is that there should be a mandate for financial education among both your bank and non-bank regulators as applicable, and that you want financial service providers to entrench consumer empowerment within the internal policies and procedures and to launch initiatives in that regard. Then over the longer term, you might say that the objective is to develop a financial education strategy and also to start to hold your financial service providers accountable, not just for what did they do, but also for the actual understanding of consumers. Okay, so with that overview in mind, what then is the status of implementation within the SADC region? So to assess this, we developed a survey instrument for member states to basically self-assess their alignment with the guidelines. And we then also had some supplementary qualitative key informant interviews with a few member states to develop case studies on those actual experiences and challenges on the ground and just color the findings in a little bit. The survey was designed to cover both sort of your baseline and progress indicators for each principle, depending on all those sub-requirements that are set for each of the guidelines. And 2 tailored online surveys were done, one for financial sector regulators and policymakers, and another one for industry and consumer associations to also just gauge from their perspective, how do they experience the financial consumer protection framework. So we received survey responses from all 15 or from 15 member states, and then also from industry and consumer associations in 7 member states. So that's ultimately quite a good response. Then based on those survey results, scores of between 0 and 3 were assigned per sub-indicator, which were then averaged up to a score per guideline, per member state, as well as across all member states, using a traffic light system just to make it easy to interpret. So when there's a score of between 0 and 0.9, on average, it would be red, and that means that this is really something that needs a lot of work still. It's the fundamental building blocks are not yet in place. And then there's amber, where there has been, some progress, but also still a lot to be done in terms of implementation. Light green shows better progress, and then dark green is ultimately the destination that you want to get out at. Right, so if we look at that and we then calculate the overall findings for the SADC region, what we see firstly, if you look at that graph, is no red. We also don't see any dark green. So overall, there's good progress. The average score is 1.9 across all elements, across all member states for the SADC region. But what we do see is that there is quite a bit of variation across the different guidelines or principles. We see that financial education and consumer recourse, and obviously, as one would expect, prudential protection and competition as well scores very well. But in terms of things like privacy and data protection, cybersecurity, those are a little bit more nascent. And then also financial consumer protection, that type of cross-cutting principle that I spoke about, is also something that is still an aspirational goal, and that we would expect to continue seeing further work in. What we also see is that there is mixed performance across member states, so that's definitely not consistent across all member states. But what is positive is that 6 of the 15 member states who responded to the survey have a score of above 2. So overall, I think the message is good progress, but as always, as we also discussed in the panel just now, more work to be done. I think it would be good to just zoom in on a couple of the more granular findings underlying this overall score, just to give you a flavor. Obviously, we don't have time now to go into all the details, but we spoke about the importance of oversight and monitoring. So I just thought I'd give you a bit of a flavor of some of the sub-requirements that feed into that. So one of the sub-indicators was the presence of a dedicated market conduct mandate among both your bank regulator and the non-bank regulator. And here you see the number of member states represented in the bars who said yes, no, or don't know. And we definitely see that there is a very strong presence of a market conduct mandate among especially bank regulators, but also non-bank regulators. The fact that there's a little bit of uncertainty expressed by 3 member states about whether the non-bank regulator has a market conduct mandate just shows that there might not be sufficient sort of coordination and knowledge across regulatory authorities. It might be that it was the banking regulator who filled out the survey, for example. But overall, I think good progress. Then if we look at the next sub-indicator, which is about the establishment of a dedicated market conduct unit, we definitely also start to see that shift in the establishment of a dedicated unit. Even compared to 2 to 3 years ago, when we consulted with all member states to develop the guidelines, we see definite progress in terms of such units being established. But once again, more so in bank regulators than non-bank regulators. What is also very important is to recognize financial consumer protection as something that is a cross-cutting mandate for various regulatory authorities, and then to have coordination mechanisms in place across various regulators, financial and regulators such as your cybersecurity or data protection, on the topic of financial consumer protection. Here again, we see some good progress, but we also do see room for improvement, with 6 member states indicating that there isn't yet such a mechanism for coordination across regulatory authorities. Then there's also the monitoring component of this oversight guideline. So we were interested in understanding to which extent monitoring of complaints as a first-line financial consumer protection is already entrenched in financial sector financial consumer protection regulation. And there, as you can see from the blue bar, it's looking good. Most of the member states also indicated that they don't only track complaints, but they also start to track additional market conduct indicators. But then where we do see quite a bit of room for improvement is in terms of using alternative data and specifically demand-side data in oversight and monitoring. So running consumer surveys, doing mystery shopping, understanding from the consumer perspective what is their experience with market conduct, and not just in terms of what the financial service providers would be reporting to you. Then there's also the guideline 9 on cybersecurity. I thought I would just showcase that a little bit because that was one of the ones that showed as requiring a little bit more work. So the sub-indicators there looked at whether there is a cybersecurity regulatory framework in place in that country, so economy-wide, not just specific to the financial sector. And there most member states said yes, so that's very good progress. And then we also asked, okay, so does that cybersecurity framework have explicit application to the financial sector? And there fewer member states said yes, and more of them were uncertain. So it just shows sort of a lack of communication and cross-regulatory coordination on that. And then we also asked, so are provisions for cybersecurity, apart from being entrenched in a broader cybersecurity framework or act, does your financial regulatory framework, let's say your Banking Act, your Insurance Act, whatever other financial services legislation, does that also entrench provisions for cybersecurity? And there again, the response was a bit lower, and we also see that there are some member states that say that they're unsure, uncertain. So overall, I think the takeaway there is that there is a need for more targeted, explicit consideration of cybersecurity in the context of financial services and the specific risks and controls that are applicable in the financial services sector. And then finally, on the guideline, that cross-cutting guideline on consumer outcomes, I mentioned to you that this is still relevantly nascent. What is very promising is that a number of member states are starting to entrench principles for consumer protection in their regulatory framework. South Africa has a very long-standing tradition of the treating customers fairly framework, but in many other countries, such principles are also being entrenched. But what is a more longer-term journey is not only saying, okay, I've got these principles in regulation, but saying, how do I create a shared language and a new corporate culture where the orientation is on the outcomes for consumers and not just on the compliance inputs by financial service providers. And I think as the FSCA can attest, and many other of you in the room can attest, that is definitely a long-term journey. And not only in the SADC region, definitely globally as well. So what we also asked for and considered under this guideline was to what extent are there explicit coordination mechanisms and explicit engagement channels between the regulator, the market conduct regulator, and industry on this topic of consumer outcomes. And here we see that the orange bar sort of surpasses the blue bar. So there is still a lot of progress to be made there, because all of this really starts in getting an active conversation going, and as I said, building that shared language. And then the next step also is to start to incorporate that in your measurement framework. And here it gets really tough, because often financial service providers would tell you, no, we don't collect that type of data to be able to report to you on things that are relevant to outcomes for consumers. And it even indicators as simple as not just tracking the number of complaints, but having a sense of what the demographics are of the people who submit those complaints, or what the turnaround time is for addressing complaints. That is not necessarily that easy to require financial service providers to report to you on, let alone outcomes in terms of, okay, what is the actual understanding of consumers, or are they actually being treated fairly? Do they feel respected? Those more difficult outcomes to assess. Over time, this definitely also requires, as I said, a use of those alternative data sources, mystery shopping, polling consumers directly, social media sentiment analysis, consumer surveys, etc. So that is the long-term journey to which I think it is important that we as a region continue to aspire to, even if it's challenging, because as I mentioned, that is ultimately where financial consumer protection lands for consumers. And that's what it should be all should be about. Okay, so some of the key takeaways from the findings. I think a few think back to that overall slide with the bars of how we're faring in terms of all the different guidelines, I think it's very important to acknowledge the progress. There were no reds. The market conduct mandate is very well entrenched. There is a definite trend towards the development of dedicated regulatory frameworks for financial consumer protection, and even towards activity-based regulation that maybe cuts across different institutional regulatory framework. And there is a very important trend towards the establishment of consumer protection or market conduct units. So that forms a very good basis or foundation for financial consumer protection. What we now need is, and I know we keep on saying this as the Holy Grail, and it's not so easy in practice, but really enhanced coordination between different regulatory authorities and more granular monitoring to really understand the heart of the problem, but also to be able to track the progress in more detail. As part of that, strengthening supervisory capacity is, as always, crucial. Being able to move to a place where there is risk-based market conduct supervision and not just rules-based. And also making sure that there is a robust complaints resolution system where consumers trust and are able to access and know that they'll get recourse if a problem arises. And then, as I said, this shift towards principles-based frameworks is definitely positive, but it needs support. So you need firms to be able to monitor implementation and measure outcomes and collect ultimately more granular consumer data. Even something as simple as saying sex disaggregated data is not really that easy to get in practice. And along with that, there's also a need to revisit supervisory processes to orientate it towards outcomes and think also about what you can draw from alternative data, such as the likes of FinScope, which a lot of countries are already starting to explore, but I think can be made much more of. As part of this implementation assignment, we also developed a dashboard tool, which was made available to all the member states, which is quite interactive, where they can check their progress at an individual member state level, and that can also form the basis for self-assessment on an ongoing basis going forward. Because this is a journey. What I've presented today to you might be a snapshot of where we stand now, but it evolves continuously, and it's important to continuously take stock of that. And I'm actually done ahead of time, Maxine.
Thank you very much, Christine. That was quite informative. Right, so I'm going to take a few questions, I think. Christine had a very good presentation, and we had a couple of good presentations earlier on in the day. Could I open the floor for some questions, please, before we ask the next panel to come through? Questions? Yes, sir.
Hello, hello. My name is Taban from Banking Association South Africa. I'm just interested on your presentation, Christine, the part around cyber security. And the little I know of these things is that most attacks don't actually happen in country, those serious ones. And the question is, how can the region help itself get more protected? You remember last year, I think there was an attack in Lesotho on the banks. And so the question that just is dwelling in my mind is, how can we as a region collectively enhance the city? Thanks.
Thanks, Thabang. Do you want to respond to that, Christine?
I think you've asked me a question that's above my pay grade a little bit. I think I must perhaps throw it back to the floor and to the SADC representatives here, because I think it's a very relevant question. Yeah, that's unfortunately all I have to say.
Anybody who can respond to that? Okay.
Thank you for the question. Christine, you are throwing the question to us. No, maybe just to provide a quick feedback. You may recall, colleagues, there was a presentation video recorded from our SADC ICT infrastructure, where you mentioned that we have collaboration from the ICT infrastructure part. We've got frameworks, and we've got also mechanisms to prevent such incidents. Of course, the case that you have mentioned, it's a real one, and it's happening on the ground. That's on the IT side. From the CCPG side, I wish Mavis around here.
She was here earlier. It looks like she's left, maybe.
Okay. We've got also under this Committee of Central Bank Governors a dedicated subcommittee, the ICT subcommittee, and they have developed a framework in terms of collaboration of central banks across the region. So I think at regional level, what is important from our perspective is to enhance that collaboration and to ensure that the cooperation and coordination across the different jurisdictions is happening. You are right, cybersecurity, it's coming from outside, but I think what is critical is for the region to have the necessary tool and mechanism to prevent such incidents. So that's what I can share from the policy perspective. But I can see also there are some colleagues from the private sector, and that's the beauty of having the private sector also in this room to share their own perspectives. But from the policy perspective, from at regional level, we have that instruments in place. Thank you.
I think, okay, Nikki?
Yeah, I was going to press it. Eh?
Yeah.
Hi, so I'm Nikki Kettles. I'm from Makuru. I spent 9 years at Finmark Trust, and I was that irritating person that used to jump around and be passionate about financial inclusion and remittances. I've got 2 questions around TCIB and specifically fintechs getting involved. So I think firstly, I need to say interoperability is incredibly important for us to ensure that we can ensure more access and we can reduce the costs. I think the challenge is that there are a lot of fintechs that have business models that currently work, and our costs are not sitting in the middle now. I mean, we have over 320,000 payout partners going into competitors. So a lot of the fintechs have created their own hub and spokes and are already doing that. I'm not saying it's right, but it works. And right now, we're not seeing that value proposition. So it's the first thing. I think that the second thing is if we shouldn't be separating remittances from normal cross-border payments, because 99% of all ADLers ensure that payment is instantaneous. So if you get your SMS now in any country that we're sending a remittance to, you can collect your money. It's part of the pre-funding model. It's the way remittances work. It's an international thing. So I suppose my question is, do we need to look at it differently? Because as fintechs, we are all already getting wallet licenses and bank licenses. And I mean, we've got 48 licenses in 15 countries, 7 in SADC. And we're connecting people with the send, store, spend. So send it, put it into your bank account or wallet, take it out. And we've been finding in our own network that we will send the money to trusted customers and they don't want it in our wallet. They still are not ready for that. So there's quite a journey. So it's more, I wonder if we shouldn't be thinking about it a little bit differently from a remittance perspective. The second question is around the centralized transaction processing, because what we are finding is we have centralized transaction processing, but there are 2 countries in SADC that from a cybersecurity or data protection will not allow us to process transactions out of the country. So it's becoming this, there's cybersecurity regulation and data protection regulation that doesn't allow sometimes the KYC data of country, but specifically transaction processing has to be in the country of origination. And I must admit, that's what we see as the biggest threat right now to reducing the costs.
So before ruling answers the first question, I think I'm interested on the cybersecurity one. So you want to tell me today we can assume that nobody's sending money somewhere?
Today it's happening, absolutely. But for the new licensing and when you're going into new countries, they are requiring the transaction processing originates in the country and is stored in the country. I'll send you.
So originate in country, stored in country.
Yeah, and a lot of personal information must be stored in country, can't be sent out, got to be captured in country. There's some very onerous data privacy.
It's interesting because
cybersecurity issues.
You see this SADC problem that I talked about yesterday.
I know, I went, oh, I love it. Can we do that?
The SADC problem that I talk about, and now it's not only SADC problem, but we've got the AU problem as well. Is that some of those issues, if they don't come to light, cannot be addressed, right? So Nikki, I'm interested in that. So please do send me a note on that, because if you're going to start very soon, and it's a pity Mavis is not here, because these are some of the challenges they should be taking up through the committee. You want to answer for Mavis? Yes, Damola?
Yes, I can answer for Mavis. So we did convene a session with the CCBG to highlight the issue of actually the application of the model law, the SADC model law on data privacy, and how that could stifle financial inclusion, especially making KYC more onerous. So we had a discussion on this. Even the FIC, Peter Smith, was also on there to kind of situate the issue and galvanize a response. So we had the very first convening, and the next one that we're going to be holding, and Mavis isn't here yet, and we will communicate the next session where it will be a much more broader stakeholder group, which would include home affairs, communication regulators, financial intelligence centers, et cetera, so that we can try and develop a roadmap as to finding a balance between data privacy, consumer protection, and financial inclusion. Thanks.
Thanks, Damola. Ruling, do you want to answer? I think there was one question for you.
It was a loaded question. Or statement.
Not got rid of me.
Yeah. I think
Ruling, just speaking to the mic so the interpreters, yeah, thanks.
Yeah, I think it's a complex matter that we're dealing with. I mean, the SADC region has chosen a centralized model for facilitating cross-border, and that's ultimately what's been established through TCIB. It's been created as open and flexible to cater for quite a variety of different participants that is out there in the market. And to Nikki's point, Ben, I fully appreciate that there's a lot of good work that has already been established. But in that flexibility lies the opportunity for us to find a way of actually facilitating broad-based interoperability. Because in yourself, most of these offerings, like we said, is closed loops. They are working. They've been proven. So why make any changes to it? And that's why I say that's where we need to really sit and think and challenge what it is. The models is there to evolve. If there's anything in the models that can be adapted to be more practical, to absorb, and to invite the broader spectrum of financial service providers to create this interoperable loop, then let it be. But I think that's the value of the scheme, because the scheme creates and sets the table for us to deal with some of these complexities. And everybody don't have to deal with that as individuals. I mean, that's a community of practice that's been put together through which we can collaborate and work and facilitate that private public dialogue to promote this. So I don't have the answers of what is the right, because what is the right model? Is there ever going to be a right model? There is commercial intentions, there's investments that's going in. But insofar, how can't we leverage those networks to the better of the broader region? And I think that's the question that we need to answer is, how do we find a way of getting these networks to work together and to interoperate? There's always a space for you to be, I said it earlier in the presentation, for all service providers to provide services to their customers where they've got established practices and it works, don't break it. But how do we find clever ways of inviting that network that's been established to interoperate with the broad other networks that's also been established? And that's the function of TCIB, is to actually get all of these to interoperate with each other. It's not to close businesses or to change businesses. Like I said, it's we're in a market of trying to create a market or developing a market, not about migrating anybody's volumes from anybody else. And I can't ever overemphasize the importance of using the scheme as a broad-based aggregator of variances in the current state of regulatory frameworks, maturity within the different jurisdictions, the varying degrees of market maturity that is experienced, and logical constraints that is currently experienced can be solved at regional level. But now we're dealing with it in a bespoke manner, say per jurisdiction, or instead of actually as a collective working towards the our goal. So, sorry, Nikki, I don't have the right answer for you. Commercially, steering towards setting up a bilateral closed loop arrangement is always going to be faster. It's definitely going to have its commercial benefits in it. But if we look at the multilateral, and there's good cases across the world at the moment, all these multilateral interventions that's been launched are always going to struggle and take longer to take off. It is more difficult because when you're dealing with level of complexity that you don't experience in your bilateral worlds, but it's always being done under very specific banners and goals and objectives, which is ultimately make sure that we include everybody.
Yeah, sure.
So just some feedback from our side.
Yeah, thanks. And I think, we'll probably find over a period of time that the newer fintechs, etc., will probably prefer this model versus going it alone and the other model versus, whereas the established MNOs, etc., will probably want to stick to their arrangements, which arrangements I might add in the work that we've conducted under TCIB have shown us some fancy footwork. We will not go into that. But we've also had some hair-raising questions around some of the stuff that we found. I think, let me pause here. Please do think of some more questions. Oh, you had a question, ma'am. Lesotho, or you know, not, okay. You've got your phone, you're happy. Okay, all right. Ma'am, yes.
Just had a quick question following through the presentations that came through from Malawi and South Africa, the panel. Is there a SADC pricing or some work on the pricing model for merchant transactions? I'm seeing this as a challenge in terms of getting digital financial service usage to increase going forward, given the fact that these payments tend to be having a charge, and people find it easier when even the merchants themselves are telling them that it's cheaper to just use cash. Yeah, thank you.
You didn't give us your name and country?
Sorry, my name is Brenda Mwanza, and I am from Zambia, Central Bank of Zambia. Yes, thank you.
Tasha. Yes, sir.
Yes, Grenard. I just wanted to add to that. The question I posed at the end of the panel in terms of growing the merchant payments. So wanted maybe if we could hear experience from other SADC member countries, if at all they have found solutions. Thank you.
Okay. So Brenda's asked a very important question. I will give you a 3-sentence response to that, but could I ask the audience at large on that one? Is this an opportunity maybe to look into this? The merchant payments? Do you have regulation today in your country or some guidelines around merchant payments? I think not. Yes, Honor.
Thank you. I wouldn't say we have a regulation that talks specifically to merchant payment. I think our regulation is mostly around the transactions, customer transactions, not necessarily P2P or remittances, but it doesn't look at the service, if I may say, and it doesn't, it's not specific to a certain product. So the limits, the transaction limits, the daily limits are the same, irrespective of which service you are using. And again, like I said yesterday, I think maybe it's because our regulation is still at an infancy stage. Maybe as we move forward, we might see the changes where we may have something that talks to regulation. So basically, when we launch a service, we just send the required information to the central bank, as well as the risk assessment report, which we might have done, both operational and rather other risks that we may have identified. So we don't have anything specific to a certain product.
Thank you.
I'm happy to engage with the gentleman who was on the panelist earlier from Malawi, so that we can have a chat around that topic.
Okay, thank you. And I think, pricing, depending on the country, is a very touchy. In South Africa, when you bring up pricing, they'll say we don't talk, or they'll walk out of the room. In other countries, they're happy to have that conversation. I recall some work some years ago where the board encouraged us to look at pricing principles. Yeah, so we've got something where we've looked at pricing principles, but also it's about behavior, I suppose, in the industries, right? And the regulators would then have to engage a lot of this. But if we recall yesterday, Mavis in her presentation talked about the CCBG under that governance, the governance structure, will be engaging with the IMF, World Bank, and they were quite serious about, the cost element. And I suppose, it trickles down to countries might begin to start asking themselves now certain questions. It's going to be some work they're doing in the next 2 years or so. But with the emphasis that the governors now want to actually start tracking these issues, whether they'll stick to cross-border only or will actually delve to what's going on in a country as well remains to be seen. I haven't seen the final scope of work that they are going to be looking at, but maybe what we should do is in the next 12, maybe 18 months, ask Mavis to come back with the findings or intermittently as they come up with what they can put out there to then come and engage this committee as well. But my suspicion is that as they start doing that work, it will start unfolding in countries. The regulators in those jurisdictions would want to take an interest. I think if we can stop here for now. I see the coffee break did work. So we are going to, yes, sorry. Could I ask that you, Honor, if you can just switch off your mic, please? Your mic, thanks. One last question, yes?
Thanks, Maxine. I think the last question on merchant pricing is a bit interesting. Maybe drawing out some experience from Tanzania, and maybe my Tanzanian regulatory colleagues can chip in here. Normally, when private sector take leads in innovation, so a perfect example is mobile money. It was launched when there was no regulation. Tanzania was lucky enough to have a regulator that took the test and learn approach, so allowed them to implement and then started performing oversight, learning about how the product works, but most importantly, walk the journey into regulating that. The country has taken a path of building an instant payment infrastructure, Tanzania Instant Payment System, that allows interoperability within a country setup. But within that, there are a number of things that they've actually done, which I think other countries can learn from. They were looking at doing a cost of transaction study. In other words, it's a more engagement approach of understanding what is the cost of that transaction and having a market discussion to say what would the charge of the transaction be. But if you take an example of interop at a country level and think about it to a regional level, just to touch a little bit on what Nikki said, then you can actually pick up some learning from that and apply that when a transaction moves from one country to another. Because, hey, payment is as simple as one person moving money from one account to another. It doesn't matter whether I'm paying a person or I'm paying a merchant or I'm paying a business. Yes, the modalities are different. In other words, I'm purchasing goods or I'm just doing a transfer. But you can easily really identify what is the cost of that and be able to have a discussion with the private sector to put a price on it. And most importantly is to understand that there is a role that a regulator does, and that is to make sure that the consumer is protected, the costs are not prohibitive, and inclusion is driven in that way to a manner that we don't charge a customer more than they should be charged. So it would be interesting to hear more from our colleagues from the regulatory environment in Tanzania. I'm looking at Komba over there, but I'm sure they've got a lot to share on this. Thank you.
Yeah, okay. I think in the interest of time, let me pause there before Kennedy comes in and ask the next panel to come forth. Let us look at that panel discussion, then we can go back to some questions. And yesterday, I gather we skipped a 3-second video, which is very important. So we'll include that somewhere and then we'll close at end of day. So could I invite Mortaza Jiwanji from the UNDP to come to the front, and they're going to have a panel discussion on sustainable finance in financial inclusion. That should be interesting. Does anybody behind, anybody of your group have a presentation? Let's see. Okay, brilliant. So this is forward, back, stop, something like that. Oh, okay, there you go. Here comes the IT guy. He'll tell you.
Thank you very much. Thank you very much, Maxine, and good afternoon, everyone. Very pleased to be part of this amazing forum. Actually, it's my first time. So my name is Murtaza Jivanji. I work with UNDP, United Nations Development Programme. I'm based in Pretoria. I'm part of a team called the Africa Sustainable Finance Hub. And of course, financial inclusion is a huge area of interest for us. And we're really grateful to SADC and Finmark Trust for inviting us and giving the chance to contribute. So I was just reflecting on this session and where it sits in everything that we've been discussing in this fantastic forum. It seems to me that financial inclusion is an end in itself, and there's a vast ecosystem at play here, and we've heard many insightful presentations and innovations over the last 2 days on how to improve, enhance financial inclusion in SADC region. And indeed, we see the same need and imperative across the continent. But I think the purpose of this session now is to also see financial inclusion not only as an end in itself, but as contributing to other objectives, development objectives, if I can put it that way. In fact, I gave away my badge today, which it was an emblem of the Sustainable Development Goals, which is an international recognition of all country national development plans. And I see that financial inclusion, as it progresses, as it innovates, is a very powerful engine of economic growth, reaching social and environmental objectives. And so I'd like to acknowledge my brother from Angola, Andre, who's now supporting the badge that demonstrates in great color the Sustainable Development Goals. So I think that's the purpose of this session, is how can financial inclusion support the broader objectives of national development and Sustainable Development Goals. I will give a very short warm-up presentation. I'll try and be brief because we do have curtailed time now for this, and then I'll invite 4 super interesting colleagues with very different perspectives to share their insights onto this. And I really liked, maybe I'll acknowledge some of the previous presentations. Christine, you showed a really interesting diagram on the supply and demand side of the equation. So I think this session is really on the demand side now. And in particular on the demand side, we're going to focus on SMEs or MSMEs or micro enterprises. There are many different terms, but really, how can this particular group benefit from and play a role in financial inclusion? So I'll start with just giving an overview. Now, these statistics are not SADC specific, they're across the continent. And it just highlights the importance of SMEs in terms of economic, social, and environmental development. And of course, they form a huge platform of employment, around 80% of job creation across the continent. They contribute significantly to GDP and represent a vast number of registered businesses in many countries. Now, these are just averages, of course, but just to make the point that they're a serious player in our economies in the continent and can hugely benefit from financial inclusion in terms of their role in the economy. I'm going to whiz through quite quickly because I just want to warm up. That being said, there are huge challenges. And Innocent, I want to acknowledge your fantastic presentation yesterday, and you really sharpened the people focus of all of this amazing work that we're involved in. In spite of the huge potential of vast number of populations that live in areas like South Santon, and in those populations, there's huge private sector SME activity that indirectly contributes to our economy. There are still massive challenges, as you highlighted, their access and engagement in all of this amazing technology. So that's one. But also I should add, maybe from a finance lens, is that we're seeing that they're having less access, for instance, to venture capitalism. And there are all sorts of factors related to that in the continent, like risk perceptions and reluctance of investors coming in to some of the countries in Africa. And as a result of that, also high and prohibitive access to borrowing, and also limited access to financial data. So these are some of the symptoms that we're seeing that we'd like to address for SME engagement in the finance space. Now, just to quickly explain how UNDP is involved in this work. So we work with many governments, mainly the Ministry of Finance. They are our primary clients on this initiative called Integrated National Financing Frameworks. And these frameworks are led by governments, generally with the leadership of ministries of finance, to better align planning, national development planning, with financing strategies. The two serve each other, ultimately for the benefit of our communities. But they also serve as an opportunity to align public and private sources of capital. Quite often we see in countries that they're quite disparate, as well as the governance vehicles and technologies around them. And so these financing frameworks also highlight financial inclusion as a top priority. Just to give you a map of the 20 or so countries that have financing strategies, and you can see quite a number in the SADC region and growing, that they highlight financial inclusion as a major priority imperative as in their financing strategies. Now, this data here is a meta synthesis of the kind of things we're hearing from the governments, mainly, around how to address and improve financial inclusion, particularly for SMEs. So we drew this from 17 of the financing strategies across the continent, many of which were also in SADC. And they cluster around three broad areas. First of all, financing instruments and solutions, and a number of those are already being discussed here today. But several colleagues have highlighted the importance of the policy, regulatory, and enabling environment. Again, I think, Innocent, it was yours. You had 2 slides worth of enablers, and I'd say more than half of them really were falling on the shoulders of our policy and regulatory agencies, as well as our international development partners. And then finally, capacity building for not only the MSCs themselves, but also all the different players in the vast ecosystem that we're seeing in the financial inclusion space. So that's just a quick summary. Now, just very interestingly, let's hear a bit from the demand side now. So what we're hearing from a lot of the countries when we ask the question, okay, so what does greater access to finance for SMEs mean, particularly in terms of financial inclusion? And you can see there on the left-hand side that the big one is credit guarantees and access to concessional financing for SMEs. But an interesting one, we're also tracking diaspora financing that's coming into the continent. And by the way, that if you look at the macro trends, that the level of diaspora financing coming into the continent is actually overtaking FDI and ODA, which is surprising. Now, whether we're using that in a way in which is contributing to development is another question, but it's a huge area of opportunity. Just to give a feel of some of the reform measures, there's also, and again, there's some innovations talked today, digitalization, strengthening of systems for microfinance, microinsurance, and also deepening financial markets, again, all for the betterment of SMEs and their engagement. So I'm whizzing through if anyone wants more information, very happy to share. But just trying to warm up this session, because we're going to hear some really great insights from 3 or 4 countries shortly. Just one last thing, and again, now this is going a bit beyond the ecosystem of specifically financial inclusion. But again, if you were to ask the question, financial inclusion for what? Financing for what in particular? One of the things that we're doing across 16 countries in the continent is this thing called SDG Investor Maps. And this is an initiative where, usually under the leadership of particular agencies or clusterings of private sector in the countries, where we identify areas of investment opportunity that not only yield a rate of return, but also contribute to a development objective like climate change, like water conservation, like the environment, like health and education, and so on. So you've got this, I think it's impact investment, which many of you might have heard of. Now, as we're talking about in financial inclusion, a big demand coming from the SME sector is that we really want to have better access to funding or funds tailor-made for smaller enterprises who don't usually have access to financing. And the SDG Investor Maps provides the vehicle for which financing could be channeled. So I just wanted to share that as we're sort of extending the ecosystem here. So colleagues, I think I'll finish there. There are many examples now of financing for SMEs. They're accessing to finance and financial inclusiveness of SMEs coming in the continent. This is just a snapshot of what we've picked up across those 20 plus countries of the kind of aspirations. These are aspirations of many of our partners in terms of how SMEs can better access financing. But we're going to hear more now from the panel that I'll introduce shortly. So I'm just going to switch over now to moderator. And if anyone has any follow-up questions or would like to discuss with us further, here are our contact details. And of course, the moderators can share. But to elaborate on some of the examples now that I was alluding to, I'd like to invite to the stage 4 colleagues. So we're filling up the floor here. First of all, Florence Mohaswa from the Ministry of Finance in Lesotho, if you'd kindly join us, as well as Sezakele Dlamini, who is the CEO for the Center for Financial Inclusion in Eswatini. And then also Eric Masinda, who is the CEO of, recently appointed, I understand, CEO of FSD Tanzania. So we've got 3 different country perspectives. And then to complement that, I'd also like to invite Judith Aguga, who is my colleague from UNDP, who is going to share some sub-regional perspectives as well. So very much, if you can all give a hand of applause to our panelists, thank you, so that they don't feel too shy. They're actually not very shy at all. We had a very exciting, dynamic warm-up conversation yesterday as we're preparing, so I'm really excited about this. So welcome to the floor, colleagues. And now, our time has been a little bit curtailed, colleague, so I'm going to ask a couple of starter-off questions. If you can be very succinct, please. We do have lunch approaching. We don't want to be too unpopular for keeping everyone, diminishing their access to lunch, to their own resources. So I'm going to start with the first question, really around access finance for SMEs. I just presented the imperative for that and some innovations around that. But we really want to hear the ground story, want to hear your story. And I might start with Florence first from Lesotho. If you could tell us some of the initiatives and innovations that for SMEs and their access to finance in Lesotho, and tell us some of those kind of hard realities of this the challenges, the innovations, the opportunities that you're either involved in or experiencing. Thank you.
Good afternoon, colleagues, and thank you so much for Motasa, for your very insightful introduction. And also, I would like to take this opportunity to thank the SADC and the FINMA Trust for creating this platform where we are able to share some insights and some experiences as member countries. So just a bit of a background in what we are doing in Lesotho in regards to enhancing access to finance for the SMMEs. We have what we call the National Strategic Development Plan, which is a government blueprint, which clearly articulates the national development objectives the country is intending to implement to push the national agenda. And let me indicate that data NSDP is already also aligned to the UN SDG agenda and Agenda 2063. And the emphasis over the NSDP is human development, human-centered development through inclusive growth and job creation led by the private sector, of which 97% of the private sector in Lesotho is the SMMEs. So in essence, what we are talking here is, it talks really home to what the private sector in Lesotho is consist of. And for the longest time ever, the private sector in Lesotho has been focusing, actually it has been more consumer based. So with the NSDP, we want to shift away and transform that sector to a producer and export driven, so that we can be able to achieve the aspiration, the national aspirations, and also to be able to achieve the SDG objectives. However, the sector is faced to so many challenges. We have had some research work, to be specific, through the MSME FinScope and also the rapid private sector assessment to try to understand, the scope, the challenges that this particular sector faces. And out of the so many challenges, access to finance always comes key, as a number one challenge. Access to land and also formalization over the sector. And if we are talking about almost over 100,000 business entities, and only about 25% of them being formal, so it's quite a big challenge in terms of their dealings with the financial service providers to be able to get the required productive credit to enhance productivity and also to grow. So what we are doing as government is, there are a number of initiatives that we are implementing to try to address those challenges, and also create some value chain in the identified growth sectors, because with the NSDP, there are sectors which have been identified as growth sectors which have a potential for possible investment, so that we can be able to realize our national objectives. So like I said, we have a number of initiatives that we are implementing. Some are donor funded, and to be specific, we have what we call the Competitiveness and Financial Inclusion Project, which there are a number of reforms that are being implemented to try to address some of the challenges that have been identified within the sector. Those include improving the business registration environment, digitizing that such that we can businesses can be able to get formalized with as little cumbersome processes as possible. One of the other challenges, it is difficult for the financial service providers to provide credit to businesses which are not formal, which lack capacity, in other aspects. Because they want as much as possible to try to fulfill the bottom line, but we've left and invest where they can be able to see some potential for growth. So we also, under that particular project, are working on incubating and accelerating the specific businesses where we see that in terms of, okay, the productivity capability, they will be able to increase, in fact, to grow and be able to be linked with financial service providers such that they can be able to in fact extend their productivity and also be competitive in the space, and also in terms of, okay, exporting their products. We are also, agriculture is a very big sector in Lesotho in terms of, okay, not just okay for livelihoods, but also for potential for growth. So we are trying to, support some business models for identify in the horticulture sector, where we see, there's a capacity to stimulate some investment. Take, for instance, we have the poultry sector, which is very nascent, but in terms of growth, it is very sluggish because, we have to depend on South Africa for the parent stock. So we see that, there is value chain in terms of, okay, supporting the poultry sector, where we can be able to have, like, okay, production of our value of our parent stock locally, that would translate into, okay, building a slaughterhouse, and also the refrigeration and both in storage and in transportation of the poultry sector. The same goes also for piggery. We, in terms of the production, we are able, but there's still some limitation because we do not have like, okay, the necessary infrastructure to be able to upscale in that area. So those are some of the initiatives that we are implementing to sort of, okay, try to stimulate growth of the sector, and also to try to sort of, okay, widen or not only widening, but also providing some innovative financing options for the sector to be able to grow. Thank you very much.
Excellent. Thank you very much, Florence. So that was really compelling. One thing that stood out to me, which was more of a kind of behavioral proposition, was that we don't look at SMEs as this kind of passive consumer base that we need to support, but actually the huge potential in productive capabilities. And I love that vision and everything that you suggested around that. So really appreciate that. Now, colleagues, what's great about this panel is that we have colleagues from government, but we have also colleagues who might have outside views of government. So I'd like to now maybe address the same question to Sizakele from Eswatini, who I understand you've also worked on these issues with government, but also now more independently. And you were talking also about, not just looking at one level of SME, but multiple layers of a value chain. So perhaps we can turn the same question to you now. Thank you.
Thank you very much, and a very good morning to colleagues. I think my presentation has all been taken by my colleague here. But maybe just to say that the problems seem to be the same. Now, our experience as Eswatini is that our government, to address the lack of access to finance for SMEs, decided to introduce financing schemes where government would, in the budget, allocate specific resources and give it to a certain sector or a ministry to say, you provide this either in the form of a grant or finance that is concessional. Good as that was, but it did not ultimately address the challenge of access to finance. Some of it was in the form of credit, providing guarantees to local banks, where a bank would give the money to a local bank and say, finance the agriculture sector, and government to provide a guarantee to mitigate the risk of the impairments, because obviously it's a risky sector. But still, we realized that the uptake, the interest from the private sector remained a challenge. As we speak today, we do not have a success story. Our SMEs are still struggling to access finance. Now, I think you did mention that this is the demand side, where we're saying as we're sitting here, we're discussing access to financial products. But I don't need financial products if I don't have the finance. And I cannot have finance if I don't have, I'm not interested in that product if I don't have access to finance, which will ultimately lead me to grow my business and then utilize those services. So government then said, let us introduce a project that is going to also address the access to finance aspect and be specific to helping farmers and the SME sector to grow their businesses to the level where they are then eligible to access the formal financial sector. That is the FinClub project, where government said, let's cluster these farmers. We're focusing on farming and SMEs, obviously, but the farming aspect, I'll speak more about that, where government said, let us identify farmers in an area, cluster them, assist them to grow a product in the farming or do animal farming, and then ensure there's access to markets. And then with the access to markets, at least you know that they will get their return. We are providing assistance to them in terms of capacity building, and even the financial literacy is part of it. And also use of the digital financial products. Again, that is part of what we teach our beneficiaries. Now, those two being taken care of, and they're doing very well, I must say. When we make an assessment, we then said, let's provide finance to financial institutions, that being a line of credit, to then channel our trained farmers, our beneficiaries, to these financial institutions to then access the loans. And we said that should then solve the problem. But as we sit here, we are seeing good progress, but the challenge still remains because our commercial banks are still moving very slow, to the extent that the usage of the line of credit is below expectation. Going forward now, we realize that the commercial banks do not have an interest in our target market. It remains risky because we all know when you walk into a bank, the first thing they see written all over you is risk. And now you need to convince them that I'm not that much of a risk. So we are having discussions now with the Ministry of Finance to say, probably let us consider a situation where we are intentional about establishing and growing our microfinance sector. And it seems to be of interest to a lot of our stakeholders, where we are going to say, let us have finance that is targeted and have the service providers that will be working with the non-banks, the people that don't have access to finance, to grow them to the level where they're able to access the finance. To that effect, we are in the process of developing the legal framework, because again, we realize that we do not have any legal framework that is going to regulate and guide and assist in growing the sector. And the plan is we will capitalize that sector, partner with the service providers, and provide finance to our beneficiaries. But what is happening currently is, even in the absence of that a legal framework, we are talking to institutions that are giving us tailored products for the sectors we are targeting. Firstly, we have our youth fund, which is a government parastatal, I'll call it. And already we're seeing growth in terms of us partnering with the youth fund to assist our youth, where we train the youth on the business aspect and also on financial literacy, and give them access to markets as well. The Youth Fund provides a consensual finance to the youth 35 and below. And with our beneficiaries having gone through our project, our training, they are then able to go to Youth Fund with our endorsement to say, we are supporting these, please do finance, they do finance. Now we provide a guarantee to say from this finance, this is a guarantee we're providing in case SADC falls, because we have to take the risk since we are saying these are our people, we've trained them and they meet all the requirements. We're also talking to one of our DFIs. Some of you may be familiar with it. It is FinCorp. To say, also have a product that is going to assist our beneficiaries and looking at progress so far. These two seem to be working well. So the plan is to expand. In the process, we are fixing our legal framework and the environment, making sure it is tailored to address the SME financing challenge, but we're also making sure that we provide access to finance as we go along. Thank you.
Thanks very much, Sizakele. What I loved about hearing that story, you know, as you talk about the almost a beginning of a very powerful trajectory, is the importance of looking at an entire ecosystem. You know, I think we can't just look at one part of our economy or SMEs or one agency, looking at the entire value chain. And so that's really inspirational. Thank you very much. And I see there's also a very important role of brokering, you know, bridging the market with the SMEs and harnessing that. So maybe with that, I'll use that as an opportunity to segue to Eric now and hear from Tanzania experience. And we may have to share now mics. Over to you. Thank you, Eric.
Thank you very much. So when you look at the Tanzanian experience, the financing landscape for SMEs really has evolved over the years, where now you have financing by sort of your, you know, like your major to sort of tier one financial institutions that are able to either, you know, like through mobilizing their own capital or raising capital through the capital market structures, or even attracting financial support from your multilateral organizations such as the World Bank and the IFC for onward lending to MSMEs. You also have development partners who are financing sort of your, who provide funding for sort of blended financing type programs to finance MSME development. That's primarily geared towards specific sectors, so like such as such as agriculture, which is where most Tanzanians tend to draw their livelihoods. And then you also have, you know, sort of your development partner type programs, which are purely sort of grant based. Now these are for your, you know, like really small startup type of entities. But what you kind of find, you know, like, but what you kind of find is that this, you know, like, is that these sort of financing models will sort of lend themselves to SMEs that are more, you know, like more on the formal side of things, meaning they're, you know, like they're actually registered and, you know, like, and they're actually formalized, but it leaves out a large swath, which is the micro sector, which is where the majority of MSMEs tend to be situated. And these MSMEs usually generally either will draw their financing from either community microfinance groups or, unfortunately, you know, loan, you know, like, or resort to sort of, I don't use the phrase loan sharking, but I guess that's the most appropriate phrase here, where it's really loans that are really sort of crippling, basically, and that don't enable, you know, like, and that sort of don't enable you to grow. And what you also find is with microfinance institutions, they generally don't tend to have access. Like your microfinance institutions and your tier 2 commercial banks typically don't tend to have the same access to capital that they can then onward lend, which then makes the cost of financing for your micro segments and even some of your, you know, like smaller entities really expensive. So as far as FSDT goes, so we're a financial sector market facilitator. We've been in the market for 20 years. Some of the initiatives that we're kind of working on, one is on sort of an impact-based grant, which is financed by the EU. But this is looking primarily at providing sort of early stage financing for SMEs that are engaged in sustainable activities, so environmental, waste management, blue economy, agriculture. It's not necessarily sector specific, just as long as it has a net positive impact, and also on job creation. But what we're also coupling with this, in addition to technical assistance for these MSMEs, is also technical assistance for and capacity building for your tier 1 microfinance institutions and your tier 2 commercial banks, because this is the segment of the financial sector that tends to interact the most with the MSMEs and the specific target beneficiaries that us as FSDT are kind of looking at. So building their capacity to better serve this target segment. So looking also at their at improving sort of their credit decision-making processes to incorporate alternative data as well, in order to make better informed decisions as to how they can be financed, but to also walk the journey with these MSMEs that'll be the recipients of this grant funding, so that those that actually perform well and utilize the grants, the way, whether it's for operational expansion or whether it's for startups, or whether it's a startup cost, that they're also able to sort of bridge the gap and say, okay, we can continue to, we can then come in sort of where the grants kind of leave off. We're also working with the Capital Markets and Securities Authority. The government of Tanzania has really been encouraged by the success of some of your larger banks in terms of being able to utilize capital markets mechanisms to attract, to issue social bonds and gender bonds as well. So part of what we're also looking at is around private equity and venture capital. So how you catalyze sort of the development of that segment as well. So we're currently exploring options with our colleagues from the Capital Markets and Securities Authority and with the Ministry of Finance around the establishment of such a vehicle as well. So this is somewhat in the early stages as well. But what this will help do is also provide sort of more of that riskier based, financing that's required, for some of these startup segments. In terms of also looking at some banks that have been able to, to raise financing that's specifically geared towards climate action. Part of it is in the form of low-cost loans, a low-cost loan for onward lending. But then part of it is also to build capacity for the rest of the financial sector, to be able to build in capital, climate risk mitigation and adaptation measures as part of, as part of their operation. So on this one, we're partnering with one of the leading banks as the implementing partner for one of the leading banks that's managed to secure this financing from the Green Climate Facility, and also working with colleagues at the Bank of Tanzania as well. And I know we're pressed for time, but I'll just add on just two additional points, pieces of work that we're working on. We're also collaborating with our colleagues at the Bank of Tanzania. Innocent had already mentioned something around the Tanzania Instant Payment System. So we supported the first phase of that system, and we're now supporting sort of on the third phase, specifically around development of additional use cases. And one of those, and one of the use cases that the Bank of Tanzania is currently looking at is the rollout of QR codes for merchant payments. So to try and sort of digitize sort of the entire payments ecosystem for merchants as well. And then there's also a microfinance, sort of like a core banking system, because most microfinance institutions in Tanzania do not pretty much just operate on like on Excel. So it's trying to come up with a generic core banking system for microfinance institutions, not only for the compliance side, so that they're able to comply with with the Bank of Tanzania regulations, but also for customer onboarding, and also for them to be able to now to now accurately be able to analyze their customer transactions, so that they're able to even maybe price them better, or or be able to offer additional value adding products. So these are just so that's just an overview of kind of the SME financing landscape. And what I've tried to outline is that depending on where an MSME is along that evolution, micro, small, or medium, the manner in which, or the mechanisms in which they're financed also has to be as diverse as their particular context and needs. So I'll stop there.
Thanks so much, Eric. And it's becoming, I think, increasingly apparent that this kind of maturing of the SME finance market space also requires a maturity with the financial institutions, the regulators, and so on, as well as the SMEs themselves. So thank you for that kind of brokering intermediary story as well. I'll now shift to Judith from UNDP to perhaps share some insights and innovations that UNDP is working on with multiple partners within SADC, and I think, as I understand, also beyond the SADC region. So Judith, over to you. Thank you.
Thank you very much. Thank you very, very much, Mutaza, and to the rest of the panelists. Most of the things you've actually been able to demonstrate them. So as you were discussing, my thought went back to what Sam presented yesterday, and that is the people in North, was it North or South? South Santon. And I asked myself, if those people just bombarded this room right now and sat here and heard us talking about all these things, I wonder what they would be thinking about. If they all just came here at once, I wonder what they would be thinking about. That's food for thought. Especially given what we have all said here, that there is accessibility. Sincerely, the question around accessibility, affordability, convenience, we have addressed that. So the issue now comes, where is usage? Where is adoption? And where is Mama Inosa in South Southampton? That's, I think, the question in the room, the animal in the room. And so where does UNDP come in place in all this? Currently, through the regional product, the regional project, or the Financial Sustainable Hub that is based in Pretoria, we are doing a number of things. We are proving concepts, actually, and maybe we are now ready for scale up. Innovative financing models. We realize that most of the work that we've been doing, or most of the work that all of us in this room have been doing, what needed to be addressed is, what are the products? And these products are not meeting needs, and therefore, can we refine these products to meet the needs of the target clients that we are looking at, or develop new products? So that is one of the work that we have been doing. And we have also promoted access to capital, especially to incubators and accelerators. We were privileged to have funding from the European Union and from the Japanese government through the Mitsutoshika program and the Inform Economy, and we are supporting this in Mozambique and in Sierra Leone. We also set up a challenge fund. And this challenge fund mainly targeted rural-based financial community services or microfinance institutions, and of course, the digital solutions. Now, within UNDP, we are looking at promoting digitalization as an enabler and not as a total solution, because we also know that through the digital, maybe apart from the remittance, we are realizing that it's mainly consumption loans that is going around. It's consumption for transport, consumption for let me have my nails done, but it's not consumption for let me buy a fridge, or a loan for let me buy a fridge, or a loan for let me buy a machinery. So my challenge would be in this room, how can we translate digital financing into productive financing models beyond the consumption of I want to buy milk or I want to take Uber. So we've realized therefore that as an enabler, we need to make digital systems as an enabler for businesses, for instance. We've promoted and and tried to do digital registration of businesses in partnership with financial institutions. Reason being, most of the time financial institutions do not have understanding of what or knowledge of who these institutions are. But so to reduce their cost of assessment or carrying out due diligences is really to register those businesses. We are working with the Vodacom in Mozambique, and we are also doing some work in Sierra Leone, where we have promoted digital financing with some of the microfinance institutions. And we also are doing digital record keeping for businesses, because we realize that the issues around AI or artificial intelligence, we wanted to see that it goes beyond what is the phone messages or the transactions within your phone, which is usually extremely mega. Most of these people that we are talking about may not really be transacting on mobile money as often. So we're realizing that we need to digitize their business transactions. We all know the issues around lack of records. So we are trying to digitize that, and we're working with the EcoBank in West Africa for that. And also digitizing savings groups. We all know that the savings groups everywhere, including in SADC here, the stoffels, as you call it here. What are we doing with the stoffels beyond bring your money, save for funeral insurance, and of course we've talked about indebtedness. Sometimes I ask myself, I think the indebtedness and the funeral insurance is like, let me borrow as much as possible and die as quick as possible after I have health insurance. Then of course we have, so how can we, for instance, translate that funeral insurance into productive financing, into productive loans? Because sincerely, Southern African people, like the SADC people, can respond very well to funeral insurance. How can we think through that and translate that into productive financing for their businesses? Instead of financing death, let us finance productive. Sorry, I'm from East Africa, but I work here and I love South Africans. I love the SADC region. So how we are also promoting the use of agri-tech, and mainly to promote access to information and ease the businesses. Now, de-risking businesses or de-risking the small and microfinance, micro enterprise is going to be the key area of focus, because financial institutions, and I want to allay the fears of my sister here, the money they have is not their money. So they have got to protect and protect and protect that money. So that when you enter the bank, you are just smelling, don't take this money. They will put everything around you not to take this money, right? So how can we de-risk? How can we cushion them? How can we cushion that risk is what's going to be the game changer about all this. And there's so many innovative ways of doing that. One is insurance. We have not tapped very much into the insurance. Most of the time we are talking about loans, we are talking about investments, but we need to tap into the insurance and be creative around it. Guarantee schemes that governments have, how can we leverage that and take it into the private sector hands, into the financial institution hands? How can we support formalization of these micro and small entrepreneurs, but not formalization to tax them, that we really very love to tax them, but to use that as a leverage for them to de-risk them to be able to get access to finance. UNDP has been promoting ecosystem development approaches, which all my colleagues have talked about. And yeah, but also there's a lot of knowledge. Since yesterday, sitting here, I'm realizing that there's a lot of knowledge that is in this room. UNDP continuously produces lots of knowledge products, but how are we using these knowledge products? How do we all use this knowledge product beyond coming to this room so that we use it to inform our operations? We use it to inform the central bank. Central bank uses it to inform its clients, that is really the financial institutions. I think there's something that needs to be done in that space as well. Of course, we cannot ignore use of grants. I think there's been a lot of grants that has been used, but how can we translate those grants to provide the TA support that is going to transform into increased usage or increased adoption for some of these? The key lessons that we've learned so far within UNDP is rethink. We need to rethink, we need to reposition the issues as we can clearly see. As I said, if Mama Inosa walked into this room, she would say, I want credit, I want to improve my business, I want my business to grow. And the question is, the discussion in this room, is that where we are heading to, or we are putting the rails, that is the digital, but we are not putting the track on those rails to ensure that we have increased access to credit, increased access to savings, increased access to investment, to insurance. And of course, one of the things that I keep asking myself, or keep thinking about, is all this digital that we are talking about is actually an urban phenomenon. And yet the majority of the people in SADC region are in the rural areas. And the majority of our people are using informal mechanisms. So how can we translate those informal mechanisms? Maybe not change them, but how can we leverage them with the formal sector? And of course, we've got the policymakers in this room, without killing the informality, but leverage them and balance it off and strike the balance such that they too benefit. Because we are not going to get rid of the informality, and we need it. We need the informality, but how can we do that? So those are the questions that I leave on the table, and thank you very much.
Excellent. Thank you so much. I've got some very powerful images from that, Judith. Putting the tracks on the rails, not financing death, but life, perhaps. No, I really appreciate those insights and innovations. Colleagues, we are running out of time, unfortunately. And it feels like we can unpack a lot of these stories a lot more. So I think I'm getting the look. We need to close. Lunch is looming. So if you'll allow me, I'm going to ask the panelists, I'm going to give you 30 seconds each, colleagues. You have almost all of the ecosystem sitting here in front of you. What would be your secret ingredient or your key 1 or 2 pieces of advice to take some of this learning across the SADC region? Maybe I'll just ask for a volunteer to kick us off. Who would like to go first? Florence,
Okay, I'll start. I would say, especially when I look in the case of Lesotho, in terms of the remittance inflows to the country, they are massive. You know, they contribute to 25% of the GDP. So I would say for those countries with a similar situation also, okay, we should leverage on, the high remittance inflows to, create investment capital. Like, so, okay, have a specific diaspora bonds, which can be directed towards, investment, capital for the SMMEs. Also, I would recommend that, we have a deliberate policies and strategies, that are facilitative for the SMME sector to flourish, and that we should be coupled with a supportive regulatory framework, that facilitate for targeted products and mechanisms, which are, support increased productivity, resilience, and also, to the climate effects. And also, continue to, form collaborations, public-private collaborations, engage so that we can be able to, hear from the side of the private sector what, are really the pressing issues, strengthen their capacities as they can be able to continue, serving their constituent for it to grow. Thank you.
Thanks very much. Who'd like to go next? Sizakele?
Thank you. I'd have just maybe 2 points. Firstly is addressing SME financing holistically, that is looking at the entire value chain. And then secondly, partnerships are key. It's a sector that is of interest to so many, I'd say, stakeholders and partners, but we don't seem to be making the progress. If you look at the contribution versus the output, So if we would strengthen our partnerships, collaborate, work together, I believe that we can make a difference. Thank you.
Yeah, thanks. So for me, it's just like 2 points. So I think what's come across, like throughout all our throughout this interaction is that the financing is available now. The context might be different in different countries, but financing is available. The question is, how do you, how do you make it, how do you enable more inclusive access by, by various segments of the financial sector to better, in order to better be able to serve, like the MSME segments and the target segments that we're, beneficiary segments that we're trying to target. So I would say that that's something that I think is, can be replicated or taken up at the SADC level, but also and really looking at meeting these target beneficiaries and these MSMEs where they are and which institutions are best placed to do that. So if the large commercial banks, if this is not a particular area of focus, then perhaps more efforts could be made to build capacities for MFIs, for tier 2 commercial banks to be able to better serve this target segment, but more importantly, be able to access the capital at an affordable cost, which will also in turn should be able to allow the target beneficiaries to be able to access financing at an affordable cost as well. So that enables them to grow. So those would be the 2 things I would say.
Yeah, thank you very much. My 10 cents would be the people we are serving. I would like to bring the people back to the room so that we really try to understand what their needs are, because I believe that we all have the same purpose. The opportunities are massive, but we just need to twig it to that. So for me, it is increased usage, partnership, measure impact, because sometimes we are really asking ourselves, why is there low uptake? But we haven't yet gotten really low uptake for the digital solutions that we have. We haven't yet really got enough evidence. So maybe we need to measure the impact of that as well. So basically, it's bring the clients back to the room, to the conversations, place them into that table and ask ourselves, our region, the regulations, the policies, the projects we are working on, is it serving that purpose? Do we really need to reinvent the wheel, or we just need to oil it a little bit? Thank you.
That was fantastic. Thank you very much, colleagues. I think a very strong systems lens, an ecosystems lens, and pointed towards the needs of our ultimate clients. I really appreciate that. With that, colleagues, I'd like you all to give a round of applause to our panelists. And Maxine, we close this session. Sorry, I hope you will enjoy your lunch slightly late. Better late than never. Thank you.
That was a very interesting session. I'm just worried about Madam Judith. She wants the people back in the room. Then she's taking their funeral benefits away. If you ever want to have a fight, Judith, is those funeral policies you don't want to know. And I always say it's an interesting phenomenon. If it's not the policies, people are usually fighting with dead bodies. I've never understood that. They run around with dead bodies. Right, I know we are standing, thank you. Yeah, something happened. Thank you. I was going to take a few questions, but in the interest of time, because I am aware some people are leaving today, I just need to check, colleagues at the back, do we have anybody asking a question or an observation? Nothing. I think next time we don't have online anything. We bring everybody into the room, because that way we don't know whether people have they've just put on their Microsoft facilities and have left us, or they're still with us. Colleagues online, we hope you are still with us. And we assume that next time you'll be here with us in person, since you're not asking us any questions. And in the few minutes, as I call up Mario, if there's any question, please just highlight Rob and team there behind. Is there a burning question, like burning, if it was not answered, you would not be the happiest person in the last 2 days? Going, gone. Right. Lucky enough, the presenters are here. I see Mavis is back with us. A number of questions were asked this morning. We tried to answer it in her absence. She's sitting behind, so please catch her at lunchtime. Unali Tata, you're not yet done. There's a madam sitting in front here who would be very interested in what Orange is doing. Her name is Sipati. So please sit with Sipati at lunchtime. Anybody else? If you didn't greet anybody and know who you are sitting next to, please look for another partner at lunchtime so that you can talk to that person who made a presentation and ask them the relevant questions. I know we promised, we thought we'd flight a 3-minute video that Farai had, but what we've asked is that we would put it out in the pack with the presentations that are going out. So you'll get it in the presentations. And any questions from that 3-minute video, we will inbox Farai, because by the time you'll be seeing that, she'll be back at home. Colleagues, allow me to, in the absence of the director, we do have our acting director who's here in person, and I'm giving you that title, Mario, for 3 seconds. Yeah, you receive, okay. He'll be our acting director. Your original program did show that we would have Director Sadwick, and he's not available. So the task has now befallen Mario, and Mario will sum up and wrap up, and then I'll come back for the final to-dos before you leave. Thank you. Mario.
Good afternoon. Okay. As Maxine said, I'm replacing Director Sadwick, our Director for Finance, Investment and Customs. I was mandated to provide some remarks, as well as some milestones that together we have accomplished. Honorable Governor of the Central Bank of Lesotho, distinguished officials from member states, members of the private sector, invited guests, distinguished delegates, ladies and gentlemen. It is indeed a great honor for me to make this intervention on behalf of the co-host Finmark Trust and the SADC Banking Association. I would like to start by thanking each one of you for honoring our invitation to this 2024 edition of the SADC Annual Forum on Financial Inclusion. In recognition of the importance of financial inclusion for inclusive and sustainable growth, agreed that a forum on financial inclusion be established for a regular exchange of experience and learning that brings together all relevant stakeholders. I strongly believe that this 2024 edition of the forum provided to all of us a great opportunity to firstly promote financial inclusion in SADC region for the purpose of inclusive economic growth and poverty alleviation. Secondly, take stock of the various policy initiatives at country level, promoting financial inclusion and the impact of the livelihood of the most vulnerable population. Finally, and most importantly, to share experience and promote positive discussion between member states. We commend the dedicated commitment and passion of everyone present in this forum in driving and contributing to the successful implementation of the 2023-2028 SADC strategy on financial inclusion and SMEs access to finance, whose objective is to support industrialization and inclusive growth in SADC, as well as to ensure that households have secure and sustainable future. Thank you all for the active participation and engagement throughout this forum on topical issues such as ICT and the digitalization of payments, the right balance between financial inclusion and implementation of FATF standards, the role of non-bank entities in the digitalization of remittances in SADC, sustainable finance in financial inclusion, and so on. Be assured that the outcomes of this forum will be presented to the Minister of Finance and Investment, including the Council of Ministers for appropriate action. At this point, allow me to highlight some of the milestones that we have achieved together since the last forum held in May 2023 until now, of which the EU-funded program, SIB program, has been very instrumental. First, you might be aware that the new 5-year SADC strategy on financial inclusion and SMEs access to finance was endorsed by the Council of Ministers at their meeting in 2023 in August in Angola. The SADC Secretariat continued to assist the member states in reviewing and developing their new financial inclusion strategy as means of domesticating the SADC financial inclusion strategy on financial inclusion. For instance, support was provided to the Kingdom of Eswatini and Madagascar, bringing the total of member states being assisted to 7. In addition to Malawi, Eswatini, and Lesotho, technical assistance had been also extended to Botswana on implementation of their MSMEs Finscope survey. The work of SADC Financial Inclusion Portal has been completed. The SADC Financial Inclusion Portal will be finally launched next year between January and February. As you noted earlier today, a dashboard to assist the region to track progress on the implementation of the SADC market conduct guidelines on financial inclusion, on financial consumer protection has been developed. Another milestone is that the reviewed SADC mobile guidelines was approved by the Committee of Central Bank of Governors at their recent meeting in Zimbabwe. Finally, the Minister of Finance and Investment at their last meeting held in August 2024 approved 8 model laws on microfinance institutions, insurance and medical schemes, financial intermediation, and the listing requirement. This is all to assist the non-banking financial institution. The model laws represent a framework for the harmonization of respective laws, regulation, regulatory, and supervisory policies of the Committee of Insurance and Security and Non-Bank Financial Institutions in the region. However, member states are now required to benchmark their domestic laws to meet the minimum requirement as set out in 8 model laws developed. This is a recommendation from the last Minister of Finance and Investment meeting. Allow me to express SADC's gratitude to the European Union for the support through the CB program and their continued cooperation. SADC Secretariat will continue to mobilize resources in support of our financial integration, especially financial inclusion. May I, on behalf of the SADC, and indeed on my own behalf, convey our heartfelt gratitude to Finmark Trust for providing the resources for convening this forum. Allow me to conclude by thanking the team that organized this forum, our speakers, and all participants, especially those connected virtually. I wish also to thank you technicians as well as our interpreter for the good job. With these few remarks, it is my honor to declare this 2024 SADC Financial Inclusion Forum officially closed. Muito obrigado. I thank you. Merci. Asante sana.
Thank you very much. That was nice and short. So someone didn't want to ask a question on the through MS Teams, their director. So I know you've closed the session, but those who have my number then decided to write to me directly. And you see, there's always somebody who knows how to find me. So the question that comes, I won't name the person, but the question that comes says, can member states who have financial inclusion strategies, follow up on the offer by AFI to review strategies. It would make them more effective and relevant. I leave that thought there. Ladies and gentlemen, I think my duty is done for the past 2 days. Thank you very much for being an engaging audience. I hope next year you'll have Brendan and not myself. We'll give him that task since he was absent this time. And those who are traveling, I'm aware that there are some traveling just after lunch, and it's lunch time now. Please do travel safely, and we hope to see all of you back here again next year. Thank you very much.